Okay, good morning everyone. I hope you guys are all doing good. I hope you guys are all perfectly fine. I do wish and hope that your preparation is going on well. So now, welcome back to one more day of this final IDT marathon. So without any delay further, let us go into the topic. Let us start our revision without any delay. So in the previous session, what we have completed is first I gave you the entire overview and some basic things which we need to have a hold in order to have seamless discussion going forward. So some essential things and all we have covered. Thereafter, we took the supply chapter, and that supply chapter also we have revised successfully. Right. So now what we are going to do is, since we are done with the intro and also the supply chapter revision, so now the next chapter which we are going to pick up for revision is going to be registration. So registration chapter we are going to pick up for a revision. So where this registration chapter fall into the entire GST system, like if you remember the yesterday's intro session, whatever we had, in that I have told you that even though goods and services or both are there, even though supply has taken place, that supply should be a taxable supply and that supply should be weighed by a taxable person, then only GST will become applicable. So like that I have give you one structure, right? So there I have told what is the meaning of taxable person. There I mentioned that taxable person means the person who is already registered under GST law, or the person who is liable to get registered under GST law, that we call that person we call him as taxable person. So now the question will come, sir, when a person will become liable for registration? When a person will become liable for registration, that's what we are going to see it in this chapter. Now see, once again, before I go into the chapter, let me give you one caution. There will not be a straightforward question from this chapter, but from this chapter there will be linkages. Definitely in many questions you will be able to find the linkages with this chapter, registration, when a person will become liable or not. So there will be linkages with this chapter in questions which you are going to face in your exam, and also there will be MCQs. There could be dedicated MCQs regarding this registration chapter, but definitely one aspect relating to the registration chapter will be compulsorily tested in your exam, not as a standalone question. So they might not ask you one standalone question from the registration chapter, just giving you a scenario where they will ask you whether a person will be liable to be registered or not. Like that they will not ask you, but connection will be there. Definitely in the comprehensive question or in other questions there will be connections, 100% connections will be there. MCQs also could be tested. So having said that, so I'm not going to go into all that procedural formalities and all. So we are going to see the relevant things which are relevant for relevant at the final level, that we will try to cover it quickly. Right. So first I would like to start with when a person will become liable for registration. Right. So here I have one summary. From the summary I will take the help and I will try to do it. Just give me 1 minute. Right. So first, I will be starting with when a person will become liable to register under section number 22. See, as a part of this registration chapter, there are some important sections which we have to learn. So the three important sections which you have to learn is section number 22, section number 23, section number 24. Section number 22 will talk about the usual circumstances when a person will become liable for registration. When a person will become liable for registration in the usual circumstances. So then that we are going to see it in the section number 22. Then 23 will talk about the persons who are not liable for taking registration, the person who are the people who are exempted from taking registration. Then we have section number 24, which talks about the persons who are liable for taking compulsory registration. So these three are the main sections which we are going to cover. Section number 2, section number 22, when a person usually will become liable for registration. Section number 23, who are the people who are not liable for registration. Then we have section number 24, which is talking about the persons who are liable for compulsory registration. So first I will be addressing section number 22. So under section number 22, when a person will become liable for registration, so this is what I have given. So under section number 22, a person will become liable for registration. They say that a person will become liable for registration when their aggregate turnover exceeds the applicable threshold limit. When the person's aggregate turnover exceeds the applicable threshold limit. So one important thing which we have to learn here is, sir, what is the meaning of aggregate turnover? So they are saying that as a business person, you will become liable for registration under GST Act when your aggregate turnover exceeds a certain limit. We are keeping one limit. When your aggregate turnover exceeds a specified limit, then you will be liable for registration. Now a doubt will come, sir, what is the aggregate turnover? So this definition is very important at various instances in order to determine eligibility, applicability. At various instances, whenever a person's eligibility or applicability for certain things has to be decided, under GST Act, they will always try to link that applicability with the aggregate turnover. So it is very important for us to know what is aggregate turnover, what will be included, what will not be included in the aggregate turnover. So just we will have a quick look here. Sir, what will get included in the aggregate turnover? It includes all taxable supplies. All kinds of taxable supplies will be included in the aggregate turnover. Even it includes exempt supplies. Like in the previous session I have told, sir, what is the meaning of exempt supply? It includes nil rated supply. It includes wholly exempted supplies. It is also going to include non-taxable supply. So even exempt supplies also you are required to include in your aggregate turnover. Export of goods or services or both. In case if a taxable person, in case if a business person is doing exports also, even that exports also will be included in the aggregate turnover. And interstate supplies of the persons having same PAN, like if you remember para number 2 of the schedule 1, so supply between related person, distinct persons, we have seen, no. So like that, in case if you are making any supply to a person under same PAN, so to your distinct person, if you are making interstate supply, that will also be included in your aggregate turnover. So these are all that will be included in aggregate turnover. So 4 things will be included. Tell me what are that 4 things which will be included. Number 1, all taxable supplies. Thereafter, exempt supplies, exports, interstate supplies between the persons having the same PAN. However, while calculating that aggregate turnover, what things you are required to exclude? See, when I say aggregate turnover, that aggregate turnover is a figure exclusive of taxes. So that's why if any CGST, SGST, UTGST, IGST cess is there. So whatever taxes under GST Act and GST compensation says, that taxes you have to exclude it. Why? Because when I say aggregate turnover, we are calculating the turnover exclusive of taxes. So that's why exclude the tax component. And also value of inward supplies on which a tax is payable under RCM. Sir, what they are trying to say, let us say for example, there is a supplier, there is a recipient, some supply has taken place and this supply is notified under reverse charge mechanism. On this supply, GST is required to be paid by the recipient under reverse charge mechanism. Let us say 1 lakh worth of supply has taken place, but it is getting covered under RCM. So on this supply of 1 lakh, 18% is the applicable rate of GST. That GST is paid by the recipient to the government. So this 1 lakh rupees of supply has taken place, no? Now the question is, this 1 lakh rupees worth of supply which is getting covered under RCM, should it be included in the supplier's turnover or should it be included in the recipient's turnover? So I'm asking you a question. In case if there is a supply which has taken place, which is getting covered under RCM, where the recipient will be liable to pay the GST under reverse charge mechanism, this supply will be included in whose turnover? Will it be included in the supplier's turnover or will it be included in the recipient's turnover? It has to be included in the supplier's turnover only. So when we say aggregate turnover, we are talking about the outward supplies, not inward supplies. Maybe here the recipient is liable to pay the GST on that inward supply under RCM, but it will not get included in the recipient's turnover. It has to be included in the supplier's turnover only. Okay, so that's why value of inward supplies. So inward supplies on which a recipient is liable to pay under RCM, that should not be included in the recipient's turnover. It should be included in the supplier's turnover. So these 2 items are required to be excluded. Sir, what else, sir? When I say aggregate turnover, it has to be calculated on all India basis. So if you are having multiple places of business in multiple states, state-wise you have to do the calculation, then you have to aggregate all that state levels turnover. So on all India basis, you have to compute that aggregate turnover. Then it includes all supplies made by taxable person, whether on his own account or on behalf of principals. So it also includes, if you are an agent, whether you are making the supply on your own account or you are making the supply on behalf of your principal, it will be included in your turnover only. And also value of goods after completion of job work. Let us say if you are a principal and you have sent some goods for job work to the job worker. So now that job work has been completed. Thereafter, from the job worker's premises, directly it is getting supplied to the customers. So you are a principal, you send some goods to the job worker. Now once the job work gets completed, the goods are directly sent from job worker's premises to the customer. So now that sale has happened from the job worker's premises directly. That will be included in whose turnover? That will be included in the principal's turnover only, not job worker's turnover. This is also one more minute point which you need to keep in mind while calculating aggregate turnover. So in case if a principal has sent the goods to the job worker for job work, and after completion of the job work, if the goods are getting sold directly from the job worker's premises, agreed, that sale is happening from the job worker's premises, but that will be included in the principal's turnover, not the job worker's turnover. Clear? So this is how you are required to calculate aggregate turnover. Now why we have understood aggregate turnover? Why? Because section number 22 says that you will be liable for registration only when your aggregate turnover exceeds the applicable threshold limit. So we have seen how to calculate the aggregate turnover. So once we have calculated the aggregate turnover, that aggregate turnover is required to be compared with the applicable threshold limit. Sir, what is that applicable threshold limit? What threshold limit will be applicable? What is that limit in which case if your turnover exceeds that limit, you will be liable for registration? So here I have one format here, the same thing which you are required to follow. So what is the applicable threshold limit? So in case where first you have to calculate aggregate turnover, then you have to check that whether the taxable supply is the business person making a taxable supply from MMNT. Is a business person making a taxable supply from MMNT? Sir, what is MMNT? So here I have given the breakup. If you can refer to the materials if you want. So Manipur, Mizoram, Nagaland, Tripura. Manipur, Mizoram, Nagaland, Tripura. So you need to check once you have calculated aggregate turnover, then you need to check whether is he making any taxable supply from MMNT. Yes, he is making the taxable supply from MMNT. Then applicable threshold limit will be 10 lakh rupees only. Then applicable threshold limit will be 10 lakh rupees. That means if you have calculated aggregate turnover, thereafter you have checked is his aggregate, is he making any taxable supply? Yes, he is making a taxable supply from Manipur. Then the applicable threshold limit will be 10 only. That means if his aggregate turnover exceeds that 10 lakh rupees, whether he is engaged in supply of goods, whether he is engaged in supply of services, or he is engaged in supply of both. So in case if he is making a taxable supply from MMNT, the applicable threshold limit is going to be 10 lakh rupees only. So that means if his aggregate turnover exceeds 10 lakh rupees, he will be liable to take registration. He will be liable to take registration. And where he will take registration, sir? In every state or union territory from wherever he is making a taxable supply. So GST registration is going to be state specific. It is not something like centralized registration where you will take one registration which will be applicable all over India. Like that, it is not that. GST is a state-wise registration. So once you are, in case if you are making taxable supply from MMNT, if your aggregate turnover exceeds the 10 lakh rupees, in every state and union territory from wherever you are making a taxable supply, you are liable to take registration. Then, okay, sir, I have calculated my aggregate turnover. Then I check the first condition. Is he making any taxable supply from MMNT? The answer is no. No, sir, he is not making any taxable supply from MMNT. Then what will happen? Next thing what you need to check is, okay, he's not making taxable supply. Now you come to the second point. Then you need to check whether is he making any taxable supply from UP Mats. You need to check whether he is making any taxable supply from UP Mats. Sir, what is UP Mats? UP Mats means 6 states they have told us here. So if I have to tell you the full form of mnemonic which I have used, Uttarakhand, Puducherry, then we have Meghalaya, Arunachal Pradesh, Telangana, Sikkim. So whether in case if you are not making, so only when the first point is not satisfied, then we will come to the second point. So first we will check whether he is making any taxable supply from MMNT. No. If I get the answer as no, sir, he is not making any taxable supply from MMNT, then you come to the second point. You need to check whether he is making any taxable supply from UP Mats. Uttarakhand, Puducherry, Meghalaya, and Arunachal Pradesh, Tripura and Sikkim. Sorry, Telangana and Sikkim. So in case if he is making any taxable supply from any of these 6 states, if the answer is yes, then the applicable threshold limit is going to be 20. So whether you are engaged in supply of goods, or you are engaged in supply of services, or you are engaged in supply of both. So in case if you are not making taxable supply from MMNT, but you are making taxable supply from UP Mats, then the applicable threshold limit is going to be supply, whether you are engaged in supply of goods, or you are engaged in supply of services, or you are engaged in supply of both. The applicable threshold limit is going to be 20. In case if your aggregate turnover exceeds the 20 lakh rupees of threshold limit, you will become liable for registration, sir, where I have to get registered. Once again, same in every state or union territory from wherever you are making taxable supply, in all that states or union territories, you have to take the registration. Next, no, sir, first condition is also not satisfied, second condition is also not satisfied. I am not making any taxable supply from MMNT, sir. I am also not making any taxable supply from UP Mats also, sir. I am not making any taxable supply from MMNT. I am also not making any taxable supply from UP Mats. Sir, then what? Then directly you come to the third point. That means you are making taxable supply from other states other than MMNT, other than UP Mats. So in those circumstances, I need to check, am I exclusively engaged in supply of goods? Is the person exclusively engaged in supply of goods? Then the threshold limit is going to be 40. Then the threshold limit is going to be 40. So if you are not making any taxable supply from MMNT, if you are not making any taxable supply from UP Mats, that means you are making taxable supply from other states. But if you are exclusively engaged in supply of goods only, you are not making any supply of services, if you are exclusively engaged in supply of goods only, then what will happen? So that applicable threshold limit is going to be 40 lakh rupees. If your aggregate turnover exceeds applicable threshold limit of 40 lakh rupees, then only you become liable for registration. But that enhanced threshold limit of 40 lakh rupees will become applicable only for those business person who are exclusively engaged in the supply of goods only. If you are exclusively engaged in supply of the goods, then only that enhanced threshold limit of 40 will become applicable. In case if you are making supply of services, or if you are making supply of both, that means if you are engaged in supply of services also or supply of goods and services both, then the applicable threshold limit is going to be 20 only. So you will be eligible to enjoy the enhanced threshold limit only when you are exclusively engaged in supply of goods. In case if you are engaged in supply of services, or if you are engaged in supply of both, then the applicable threshold limit will get reduced to 20 lakh rupees only. And here there are a few more things which we need to understand it here. In case if you are not making taxable supply from MMNT, in case if you are not making taxable supply from UP Mats, even though you are exclusively engaged in supply of goods, generally speaking, you will be eligible to enjoy the enhanced threshold limit of 40, but there are some exceptions. That means even though you are exclusively engaged in supply of goods also, even though you are not making any taxable supply from MMNT, even though you are not making any taxable supply from UP MATs, but still in some circumstances you can't enjoy that enhanced threshold limit of 40, your threshold limit will reduce to 20 lakh rupees only. Sir, what are that exceptions? Where even though I'm engaged in supply of the goods, I can't enjoy the enhanced threshold limit of 40. My applicable threshold limit will get restricted only to 20. When, sir? So what are that exceptions? Number one, in case if you are a person liable for compulsory registration. So we are going to see section number 24. There they have given list of people who are liable for compulsory registration. So in case if you are a person liable for compulsory registration under section number 24, no limit, nothing will be seen for you. Directly you become liable for registration. Similarly, if you are a person engaged in making supplies, so they use the phrase here, if you are a person engaged in making supplies. When I say making supplies, it could be either manufacturing or it could be trading. So if you are a person engaged in making supplies of what, sir? These specified products. What are they? Ice cream, pan masala, tobacco and tobacco products, fly ash, bricks, blocks or aggregate, bricks of fossil mills or siliceous earth, building bricks, earthen or roofing tiles. So if you are either engaged in manufacturing, sir, I am not manufacturing, I am only doing trading. Yes, still. So if you are engaged in making supplies of any of these 7 products, then you become ineligible for enhanced threshold limit of 40. Your applicable threshold limit will get reduced to 20 lakh rupees only. Okay, next, a few more exceptions. In case if you are making any interstate supply, then you anyhow will become compulsorily liable for registration. If you are making an interstate supply, so then also you become ineligible for enhanced threshold limit of 40. But this we need not read it separately. Why? Because if you are making any interstate supply, automatically you will get covered under section number 24. You become anyhow liable for compulsory registration. Thereafter, in case if you are a person who has taken voluntary registration, so let us say you are not liable for registration, your turnover did not exceed the applicable threshold limit, but you voluntarily went and took the registration, then what is the purpose of seeing any limit for you? Not required. So these are the exceptions. This is very important. So sometimes you will not be engaged in making any taxable supply from MMNT. You are not engaged in making any taxable supply from UP MATs. You are exclusively engaged in supply of the goods also. Practically speaking, you should be eligible for enhanced threshold limit of 40. But in some circumstances, that 40 lakh rupees of limit will not become applicable. Only your applicable threshold limit will get reduced to 20 lakh rupees. So what are that circumstances? These are the exceptions for enhanced threshold limit of 40. Okay, right. So this is what, simply if I have to put it, 22 subsection 1 says. So these are the circumstances when a person will become liable for registration under section 22 subsection 1. Okay, so few more things if I have to talk under section number 22. Few more things if I have to talk under section number 22. There are other subsections also. 22 subsection 3. Sorry, 22 subsection 2. So 22 subsection 1 talks about the turnover limit. When a person's aggregate turnover exceeds the applicable threshold limit, then he will become liable for registration. Under section number 22, we have various other subsections also, which are talking about cases where a person will become liable for registration. So first, if you see 22 subsection 2, they say that every person who on day immediately preceding the appointed day. Sir, what is appointed day? The day on which GST has came into force. That is on 1st of July 2017. So though the day on which immediately preceding the appointed day, that means as on 30th of June 2017, if a person is already registered or if is already holding a license under any existing indirect tax law, if a person is already registered or holding some license under already existing indirect tax laws, then with effect from the appointed day, that means with effect from 1st of July 2017, you become liable for registration under the GST Act. No turnover limit, nothing will be seen. Since you are already registered under existing indirect tax laws, you become liable for registration under GST automatically. Similarly, on transfer of business, in case if the business is getting transferred, when I say transfer, it could be succession, it could be ownership change, or it could be even death of a sole proprietor. That means his business is getting taken over by his legal representatives. So in case of transfer of business as a going concern, then what will happen? Then the transferee will cancel his registration and the transferor is liable to take new registration. In case of transfer of business, the person, whoever is transferring the business, the transferor will cancel his registration, and the transferee to whom the business is getting transferred, he has to take a fresh registration. Next, and similarly, in case of business transfer because of amalgamation or demerger because of an order of court or tribunal, if amalgamation is happening, two companies are getting amalgamated into one, or demerger is happening, one company is getting split into two. So if this amalgamation or demerger is happening because of order of a court or tribunal, in that case is also the transferee. In case of amalgamation, the amalgamated companies. In case of demerger, the resulting companies, who they will be the transferee. They must register with effect from the date of issuance of registration certificate of ROC certificate of incorporation. So that newly amalgamated company or that newly resulting companies, with effect from the issuance of ROC's certificate of incorporation, from that date the transferee will become liable for registration. Clear? Right. So this is what regarding section number 22, usual circumstances where a person will become liable for registration. Now we will see section number 24. Sir, what is section number 24 talking about? Section number 24 is talking about the instances where a person will become liable for compulsory registration. So when I say compulsory registration, your turnover limit and all these things will not be seen. You become liable for compulsory registration irrespective of your turnover. Nothing will be seen here. You have to take compulsory registration in case if you are falling under section number 24. Sir, who are that people who are liable to take compulsory registration? Number one, if you are a person making any interstate taxable supply. First category of persons who are liable for compulsory registration, who are they? If you are making interstate taxable supply, sir, you are located in one state, but if you are making a supply to another state, that means if you are making any interstate taxable supply, you become liable for compulsory registration. But the government has given some relaxation. Initially, they told the person whoever is making interstate taxable supply, they are liable for compulsory registration, but they have given some relaxations. Sir, what are that relaxations? First relaxation, they told in case if you are making interstate supply of taxable services. You are making interstate supply, but you are not making interstate supply of the goods. You are making interstate supply of services. Okay, we will not make you liable for compulsory registration. You continue to enjoy that applicable threshold limit of 20 lakh rupees. We will not make you liable for compulsory registration. So initially what they told, the person, if you are a person making interstate taxable supply, you are liable for compulsory registration. But later they are giving relaxation. What relaxation they have given? Okay, no problem. In case if you are making interstate taxable supply of services, you can enjoy the threshold limit of 20. That means if you are making interstate supply of goods, then no threshold limit, nothing, you become liable for compulsory registration. So that is one relaxation. Thereafter, they have given one more relaxation for the person whoever is making interstate supply of goods also, but not for everybody. But for whom, sir? If you are a person making interstate taxable supplies of notified handicraft goods or notified handmade products up to 20 lakh rupees, you are not liable for registration. So let us say if you are a person who is making interstate supply of goods. So practically what they have told, only they have given relaxation for interstate supply of services. Sir, but I am a person, I am making interstate supply of goods, sir. I'm making interstate supply of goods. Generally, I become liable for compulsory registration. But department is saying, in case if you are making interstate supply of goods, but that goods whatever you are supplying are notified handicraft goods or notified handmade goods, which are predominantly made by hand. You are making interstate supply of goods, agreed. Generally, you should become liable for compulsory registration. But in case if the goods whatever you are making a interstate supply, the goods whatever you are making an interstate supply, if they are either notified handicraft goods or if they are notified handmade goods which are predominantly made by hand, then we will let you enjoy the threshold limit of 20 or 10 in case of MMNT and remaining in all other circumstances 20. So you need not take compulsory registration. So to protect that handicraft industry, handmade products industry, they have given that relaxation. But however, that person will be required to fulfill some conditions. The person whoever is making that interstate supply of notified handmade or handicraft goods, he is required to fulfill some conditions. Sir, what are that? Number one, his aggregate turnover should not exceed 20 or 10. So if his aggregate turnover anyhow exceeds 20 or 10, he become liable for registration. And he must have a PAN. He must have a PAN and he must generate an e-way bill. E-way bill is compulsory without any limit. Generally, e-way bill will become applicable only when the threshold, only when the consignment value is more than 50,000. But in case of this person who is making interstate supply of notified handicraft goods or handmade goods and who is enjoying the relaxation of not taking registration, so that person must have a PAN and he must compulsorily generate the e-way bill without any consignment value limit. Even if he is transporting 10,000 worth of goods of notified handicraft products also interstate, he is liable to generate an e-way bill. Okay, right. So this is the first category of persons who are liable for compulsory registration and related exemptions. Next one, second category of persons who are liable for compulsory registration, they told CTPs, making taxable supply. If you are a casual taxable person and if you are making a taxable supply, then also you are liable for compulsory registration. So as you all are aware, CTP, what do you mean by CTP? A person who doesn't have a fixed place of business in one state. So casually he is coming to another state making a supply and he will go back to another state. That person we call him as CTP. So in case of CTPs also, they told in case of CTP making taxable supply, you are liable for compulsory registration. But however, even for one kind of CTP, they have given relaxation. So practically speaking, a CTP is liable for compulsory registration. But what they have told, even for CTP also, they have given relaxation. What relaxation? If you are such a CTP who is making interstate supply of notified handicraft goods or notified handmade products, then you are not liable for registration unless and until your aggregate turnover exceeds that 20 lakh rupees or 10 lakh rupees. So whatever relaxation they have given to a normal person who is making interstate supply of notified handmade products and notified handmade goods, the same relaxation even they have given it for CTP who is making interstate supply of notified handmade products or notified handicraft goods. So they need not did not get liable for compulsory registration unless and until their aggregate turnover exceeds 20 lakh rupees or 10 lakh rupees. But here also these CTPs also must have a PAN and they must have generated the e-way bill. That condition will be applicable here as well. Right. So second category of person who is liable for compulsory registration we have covered. Then third category of persons who are liable for compulsory registration is if you are a person who is required to pay tax under reverse charge mechanism on inward supplies. So what they are saying, if you are a recipient, if you are receiving some inward supplies, when I say inward supplies, it could be supply of goods also, it could be supply of services also. So if you are a recipient on your inward supplies, if you are liable to pay GST under reverse charge mechanism, if you are a recipient on your inward supplies, if you are liable to pay GST under reverse charge mechanism, then this recipient is liable to take compulsory registration. His turnover limit and all will not be checked. Because in case of RCM, recipient is liable to pay the amount of GST to the government. If recipient is liable to pay the amount of GST to the government, he is required to be registered. So that's why they have told if you are a recipient who is receiving inward supplies on which you are liable to pay the GST under reverse charge mechanism, you are liable, that recipient is liable for compulsory registration. So this recipient is required to get compulsory registration. Now there is one relaxation given for supplier. There is one relaxation given for supplier. So what relaxation they have given is if you are such a supplier, if you are making various outward supplies, but all that outward supplies are getting covered under RCM. If you are a supplier, if you are making various outward supplies, but if all your outward supplies are getting covered under RCM, that means you are making all outward supplies. On all that outward supplies, your recipients are only discharging the GST under reverse charge mechanism. You don't have single outward supply on which you are required to pay the GST under forward charge mechanism. You are not having a single outward supply where you are required to collect the amount of GST from your recipient and pay it to the government. Then what is the purpose of granting you registration? Not required, no. So that's why they have given relaxation to these suppliers. Recipients will be liable to pay. Recipients who are liable to pay GST under RCM, they are required to undergo compulsory registration. But they have given relaxation to the supplier. If you are such a supplier who is making outward supplies, but all your outward supplies are getting covered under RCM, you don't have a single outward supply on which you are required to collect the GST and pay to the government. No need for any registration. So that's what the exception they have given to the supplier. So we can go and refer to this A point here. So persons making only reverse charge supplies, they are talking from the supplier's perspective. If you are having only outward taxable supplies which are covered under RCM, then as a supplier you are not required to take any registration. Thereafter, NRTP, if you are an NRTP making a taxable supply, you are liable for compulsory registration. CTP, NRTP, we will see in a short while. Some procedure is there that we will talk about it. So CTPs and NRTPs, they are liable to undertake compulsory registration. Then we have e-commerce operator. So today e-commerce business has become part and parcel of our life. So even they have put the responsibility of compulsory registration on the e-commerce operator. Even the e-commerce operators are also liable to take compulsory registration. But which kind of e-commerce operators, sir? So they have spoke about two kinds of e-commerce operators. Who are they? So those e-commerce operators who are required to collect TCS under section number 52. If you are such an e-commerce operator who is required to collect TCS under section number 52, we will see who are that e-commerce operator who are required to collect TCS under section number 52 in the TCS chapter. Okay. Then e-commerce operator dedicated chapter we have, there we will see. Similarly, if you are an e-commerce operator who is required to pay tax on notified services under 9 subsection 5, like in the previous session I have told, there is one more mechanism. One is forward charge mechanism, one is reverse charge mechanism, and one more mechanism is 9 subsection 5 mechanism, where neither the supplier nor the recipient will pay the amount of GST. E-commerce operator will directly pay the amount of GST, yes or no? So if you are such an e-commerce operator who is required to pay GST under 9 subsection 5, or if you are such an e-commerce operator who is required to collect TCS under section number 52, you will be liable for compulsory registration. Not just to the e-commerce operator, what they have told is even the suppliers who are making supplies through the e-commerce operator who is required to collect TCS under section number 52. Anyhow, that e-commerce operator who is required to collect TCS under section number 52, he will get himself liable for compulsory registration. But not just the e-commerce operator, the suppliers who are making supply of goods or services through the e-commerce operator who is required to collect TCS under section number 52, even these suppliers are also liable for compulsory registration. Even these suppliers, even that suppliers of goods and services who are making supplies through the e-commerce operator is also liable to get compulsory registration. But however, they have given relaxation. But however, what they have told, they have given some exceptions to these suppliers who are making supply of goods or services through the e-commerce operator. For them, they have given relaxation. Sir, what relaxation they have given? Whatever relaxations that are available for normal suppliers, the same relaxations have been given for them as well. Sir, what relaxations are given for normal suppliers? That means if you are a supplier making supply of services through the e-commerce operator, and if you are making interstate supply of services or intrastate supply of services, then you are not liable for registration. That is a normal relaxation given to a usual supplier, no? So same relaxation they have given. So if you are a person making supply of services through the e-commerce operator, okay, we will consider you. You are not liable for registration up to 20 lakh rupees or 10 lakh rupees, whether you are making interstate supplies or intrastate supplies. Sir, if I am a person engaged in supply of goods, sir, in case if you are a person engaged in supply of goods and you are making supply through the e-commerce operator, then also you are not liable for any registration, provided your aggregate turnover does not exceed that 40, 20 or 10, depending on the applicable threshold limit. And also, you should not make interstate supply here. You should not make interstate supply. If you are a supplier of goods, supplying the goods through e-commerce operator, you should not make interstate supply. Why? Because if you are a normal person making interstate supply, you will become liable for compulsory registration. No, the same thing they are bringing it here also. So even through the e-commerce operator also, if you are making only intrastate supplies, if your aggregate turnover is up to 40, 20 or 10, you are not liable for registration. But in case of supplier of services who is providing services through the e-commerce operator, whether you are engaged in interstate supplies or intrastate supplies, you can enjoy the threshold limit of 20 or 10. Okay, right. So that's what exceptions you will be able to find it here. So point E and F. So anyhow, this you will get more clarity when we cover the e-commerce operator chapter. So that's what this E and F points are talking about. Then, so let us come to a few more categories of the persons who are liable to undergo compulsory registration. Number one, persons who are required to deduct TDS under section number 51, whether or not separately registered under this act. So those people who are required to deduct TDS under section number 51. Sir, who are that people who are liable to deduct TDS? That also we are going to see. So in the payment of taxes chapter, we are going to have one topic regarding TDS. There we will see who are that people who are liable to deduct TDS. So, but if you are a person who is liable to deduct TDS under section number 51, you are liable to undergo compulsory registration without any limit. Next, persons who make taxable supply of goods or services on behalf of other taxable person, whether as an agent or otherwise. So they are saying that, let us say if you are an agent, if you are making supply on behalf of principal, if you are making a supply on behalf of principal, then you will become liable for compulsory registration. This agent will become liable for compulsory registration. But when, sir? Only when two conditions are fulfilled. Number one, whatever supply he is making on behalf of his principal, that supply should be a taxable supply. And his principal on whose behalf you are making supply, that should be a taxable person. That principal should be a taxable person. So then only agent will become liable for compulsory registration. So they are saying agent will become liable for compulsory registration, but only those agents. But agent will become liable for compulsory registration only in two circumstances. What are the two conditions? Number one, so whatever supply that agent is making, that supply must be a taxable supply. On whose behalf he is making that supply as an agent, that principal must be a taxable person. So only those agents who are making a taxable supply on behalf of a taxable person, then only those agents will become liable for compulsory registration. Next one. Other categories of the persons who are liable for compulsory registration. Every person supplying OIDR services, online information database access and retrieval services, from a place outside of India to a person in India other than registered person. Netflix, Amazon Prime, these are the people who are providing OIDR services to the people in India from a place outside of India. Netflix is outside of India. From a place outside of India, they are providing OIDR services to India, to a people located in India who are not registered. Let us say like you and me, we are taking Netflix subscription. So a person, OIDR service provider located outside of India, they are providing services to a person in India who is unregistered. So even that Netflix is also required to take compulsory registration. Then ISD, Input Service Distributor, whether or not separately registered under GST. In the Input Tax Credit chapter, I'm going to tell you about this ISD. So even Input Service Distributors are also liable to get compulsorily registered. And every person supplying online money gaming from a place outside of India to a person in India. If you are a person providing online money gaming services from place outside of India to a person in India, liable for compulsory registration. Or, so these are all till now notified, or any other class of persons or persons as may be notified by the government on the recommendations of the council. So till here the list is already notified, but they have one more residuary power. They have reserved one more power. So by way of this point number 11, the government is reserving the power in future. If the government wants to notify any new persons or other class of persons in order to be liable for compulsory registration, they can bring new people also under this category. Okay, right. So this is what regarding the persons who are liable for registration compulsorily, and related relaxations also we have seen. Now what we will try to do is section number 23 we will try to do. So what section number 23 will say is the person who are not liable for registration. It will specifically talk about the persons who are not liable for registration. Sir, who are that people who are not liable for registration? Number one, if you are a person exclusively engaged in business of supplying goods and or services which are not liable to tax or wholly exempt from tax. Let us say you are a business person, you are making only exempt supplies. You are making only exempt supplies. When I say exempt supplies, you are making only wholly exempted supplies. Let us say you are supplying only X are wholly exempted. So your turnover is 100 crores, not liable to pay, not liable to take registration, because whatever supply you are making, that is purely a exempt supply. Or let us say you are running a bar, where you are running a bar where you are selling only alcoholic liquor for human consumption. So that alcohol in that bar, you are selling only alcoholic liquor for human consumption. Your aggregate turnover has exceeded 5 crores. Still you are not liable to take registration. Why? Because wholly you are engaged in non-taxable supply. Similarly, if you are exclusively engaged in only nil rated supplies also, then also you are not liable for taking registration, irrespective of your whatever your turnover is. So that's what they say. If you are a person who is exclusively engaged in business of supplying goods or services which are not liable to tax or which are wholly exempt from tax, no need to take registration. Unnecessary, no. The logic here is the registration is unnecessary. Even if you take registration also, you are not going to pay any amount to the GST. Then what is the purpose of having the registration? That's it. Next, one more category of the person who has been exempted from taking registration is if you are an agriculturist, to the extent of supply of produce out of cultivation of land. If you are an agriculturist and if you are making supply out of produce out of cultivation of land, so whatever produce you had from cultivation of land, that only you are making a supply, then you will be exempted from taking registration, no matter how much amount of turnover you have made from that produce out of land. But here, sir, who is agriculturist? That we have to remember. Not everybody. The agriculturist status will be given only for individual or HUF. So who will be able to enjoy that status of agriculturist? Individual or HUF. So only individual or HUF will be exempted from taking registration. So if, let us say for example, if they created a partnership firm where a group of people have become partners and in the name of the partnership firm they are carrying out agricultural activity, can they enjoy this relaxation from taking registration? No. Why? Because in the definition of agriculturist, they have told that only individual person or HUF, they will only be recognized as agriculturist. So what is agriculturist? So it is an individual or HUF who undertakes cultivation of land either by their own labor. By their own labor they are doing the cultivation, or by labor of their family, or by servants on wages payable in cash or kind, or by hired labor under personal supervision of any of the members of the family. And one more point you are required to remember here. See, if the agriculturist is making supply out of produce out of cultivation of land, then only he will be exempted from registration. In case if the agriculturist, in addition to making supply out of cultivation of land, if he is making any other supply, then he will become liable for registration. Let us say for example, there is an agriculturist, he is having cultivation out of land. In addition to that, he is also making supply of rice. Rice is not an agricultural produce. Paddy is an agricultural produce, but rice is not an agricultural produce. So along with supplying paddy, he is also supplying some rice. So now he is not just making supply out of cultivation of land, he is also making supply other than out of cultivation of land. Then he will become liable for registration if his aggregate turnover exceeds the applicable threshold limit. So like this, two people have been specifically exempted from taking registration. Number one, if you are a person who is exclusively engaged in making wholly exempt supplies or non-taxable supplies. Number two, if you are an agriculturist to the extent of supply out of produce out of cultivation of land. Right. Next one. So this is what regarding section number 23. Fine. So now what we will try to do is section number 25, 26, 27 will talk about procedural formalities. Don't worry, they will not ask you procedural formalities at the CA final level, but there are few important things from this 25, 26, 27 that I will try to cover. So what is that is, number one, when and where, or what is the time limit within which you have to apply for registration? What is the time limit within which you are required to apply for registration? In case if you are liable for registration under section number 22 or 24. So let me put it this way. In case if you are a person liable for registration under section number 22 or 24, let us say for example, so if you are a person liable for registration under section number 22 or 24, let us say if your aggregate turnover has exceeded the applicable threshold limit. So on one particular day, let us say for example, on 15th of January, your aggregate turnover has exceeded the applicable threshold limit, or you become liable for registration under section number 24. Let us say you are making interstate supply. Because of making interstate supply, you become liable for compulsory registration. So whenever you made that interstate supply, that will be the date when you become liable for registration. So on one fine day, you become liable for registration. Let us say on 15th of January, you become liable for registration. Now, what is the maximum time limit within which you are required to make an application for registration? So you are required to make an application for registration within 30 days. within 30 days you are required to make an application for registration. Sir, can't I make an application for registration beyond 30 days? No, you can even make an application for registration even beyond 30 days also, no issue. But what will happen is you will lose some benefits. So you must make an application for registration within 30 days. Let us say, for example, this person is making an application for registration on 30th of January. When he became liable for registration, 15th of January. When he is making application for registration, 30th of January. So within the time limit or beyond the time limit? Within the time limit. So within 30 days, he made an application for registration. Thereafter, procedural formalities and all will happen. And on one fine day, you will get your registration certificate. You will get your registration certificate. So let us say you got your registration certificate on 15th of February. That means you got your GSTIN number here on 15th of February 2020, 2000 something. So you got your registration certificate. So even though you got your GSTIN here, even though this is the date of grant of registration, but your registration will be effective retrospectively. Your registration will be effective retrospectively. So from this date itself, the registration will be deemed to have been effective. From the date whichever date you become liable for registration, from that date itself, it will be effective. Okay, so you got your GSTIN number here, but still that GSTIN will be effective retrospectively. So that means whatever supplies you have made from 15th of January till 15th of February, from the date you become liable for registration till the date you got the registration certificate, even for this duration also, you are liable to pay GST. But during this duration, since you don't have GSTIN, would you have collected GST? During this duration, you got your GSTIN number here? No. So, but from 15th of January, you become liable. So, from 15th of January till 15th of February, whatever supplies you have made, on that you would not have collected GST. So, you would not have collected GST. No issue. Now, what you can do is you can give something called revised tax invoices. You can give something called revised tax invoices. So you can give revised tax invoices, charging the GST amount separately, and you can collect the amount and you can pay it. So like that, here revised tax invoices will be permitted. Okay, so whatever it is, this will be the position in case if you are making an application for registration within 30 days. If you have submitted the application within 30 days, this will be the case. Now, sir, what if I make an application beyond 30 days? What if I made an application beyond 30 days? Let us say, for example, you become liable for registration on 15th of January. You are submitting your application for registration on 28th of February. So this is the date when you become liable. This is the date when you made an application within 30 days or beyond 30 days, beyond 30 days. Then on one fine day, verification and all will happen and they will give you registration certificate. Let us say they granted your registration certificate on 15th of March. So this is where you got your GSTIN. So when this registration will be effective, from here only it will be effective. There will be no retrospective effect. From here only your registration will be effective. You will not have any retrospective effectiveness of the registration. So from this date itself, your registration will be effective. But when your liability will start from here only. See, whenever you become liable, from that date only your liability to pay GST will start. But you would have made the supplies from 15th of January till 15th of March. On that, are you liable to pay GST? Yes. But would you have collected GST? No, because you got your GSTIN only on 15th of March. Sir, can I issue revised tax invoice? No, you will lose your power to issue the revised tax invoices. You will lose your power to issue the revised tax invoices. Okay, and one more advantage is if you make the application within 30 days, one more advantage is one day before, that means you become liable for registration on 15th of January, no? So one day before, since you made an application within 30 days, one more benefit will be there. One day before the date you become liable for registration, that means on 14th of January, whatever stock of inputs, whatever inputs are there, which are in the form of stock, only inputs. That means whatever input goods you have, which are either in the form of stock, either in the form of semi-finished goods, either in the form of finished goods, that you can take ITC. By submitting one form GST ITC 01. This anyhow we will see it in the ITC chapter, but I am connecting all the relevant provisions at one place. So in case if you become liable for registration and if you are submitting your application within 30 days and you got the registration certificate, one day before you become liable for registration, on that date, whatever inputs which are contained in stock, whatever inputs which are contained in semi-finished goods, whatever inputs which are contained in the finished goods, so on that you have to calculate the amount of GST. On that whatever GST is attributable, that you can take it as ITC. But in case if you have made the application beyond 30 days, you will lose that right to claim the GST on your stock. You can't claim the GST available on your stock. That right also you will lose it. So that's why if you want to enjoy all these benefits of revised tax invoice or availing the ITC on stock, which is there before I become liable for registration, if you want to enjoy all these benefits, you have to comply with the law. You have to submit an application for registration within 30 days from the date you become liable. Understood? Right. Next. So let us proceed further. Fine. And one more case here. In case of CTP or NRTP, in case of CTP and NRTP, you here usual time limit of 30 days from the date you become liable will not become applicable. CTP and NRTP, they are required to submit an application for registration 5 days prior to the commencement of business. So for CTP and NRTP, there is no 30 days of time limit will be given. CTP and NRTP, they are required to submit an application for registration 5 days, at least 5 days prior to the commencement of the business. Next. So one more point here. Sir, if I'm a person making supply from territorial waters, if I'm a person making supply from territorial waters. Sir, what is this territorial waters and all? So let us try to understand the definition of India. What is the definition of India under the GST Act? So this we have to understand. So what is the definition of India? Definition of India means entire territory of India. Under GST Act, I'm saying. Under GST Act, what is the meaning of India? So under GST Act, what is the meaning of India? Means entire territory of India, entire landmass of India. Not just that, it includes even territorial waters also. Sir, what is territorial waters? From the coastal line, if you go up to 12 nautical miles, that I call it as territorial waters. Even that territorial waters also will fall under India definition. Below that, whatever soil, seabed is there, that will also fall under India definition. Not just that, it includes also exclusive economic zone. It includes also exclusive economic zone. Sir, what is exclusive economic zone? From the coastal line, if you go up to 200 nautical miles, from the coastal line, if you go up to 200 nautical miles, that area we call it as exclusive economic zone. That exclusive economic zone also will fall under India definition. Below that, whatever landmass we have, whatever soil we have, that we call it as continental shelf. What do we call it? Continental shelf we call it. Even that continental shelf also will fall under India definition. So what is included in India definition? It includes the territory of India. It includes the territorial waters, which will extend up to 12 nautical miles, and seabed, subsoil below it. It also includes exclusive economic zone, and exclusive economic zones will fetch up to 200 nautical miles. And it also includes the continental shelf, landmass below that exclusive economic zone, that will also fall under India definition. Not just that, the airspace above territory and territorial waters. The airspace above territory of India and territorial waters, even that airspace above the territory of India and territorial waters, that will also fall under India definition. So now what they are saying is, let us say, now why I have explained you this is, let us say for example, in the 12 nautical miles, in the territorial waters, there is a person who is making a taxable supply. So who will generally make a taxable supply in the territorial waters is casinos. If you go to the Goa and all, within 12 nautical miles, you will be able to find some cruise ships. Inside that cruise ships, they will be running these casinos, where they will provide a bunch of services. There will be restaurant, there will be this actionable claims and all will be provided. So now this person is liable to take registration. This person is liable to take registration, but where he's located? He's located in the territorial waters. They don't have any place of business on land. They will have their place of business in water. In the territorial waters, they have this cruise ship which will be anchored, and in that cruise ship, they will provide that crew or restaurant services, casino services and all. So now they become liable for registration. Here they are also required to submit an application for registration. But with whom they will submit an application for registration? With whom they will submit an application for registration. So here the act says these people who are located in territorial waters, they are required to submit an application for registration with the nearest state or union territory to the coastal line. So to the coastal, whichever is the nearest state or union territory to the from the coastal line, that will be with that state or union territory, they have to submit an application for registration. Let us say this casino is located in the territorial waters of Goa. So the nearest coastal line or territory is Goa. So they have to submit an application for registration with Goa. Goa is here. Don't say that, sir, you are saying territorial waters here. Here there is no Goa, no. Just for example sake I am saying. So let us say this vessel is located here. This vessel is located here. So whatever is the nearest coastal state or union territory, with that state or union territory, they have to submit an application for registration. Okay. But here also the time limit will be 30 days only from the date on which they become liable for registration. Next, as we have already told you, it is a state-wise registration and all these points we have already covered. So few more procedural formalities which I want to cover is, there is something called UIN. There is one more special registration called UIN. So what is this UIN is? See, we have UN bodies, United Nations bodies, we have multilateral financial organizations we have, and thereafter we have this foreign embassies, US embassy, US consulates, like that we have some specified international organizations. Now, whatever outward supplies which are provided by these UN bodies, multilateral financial organizations, or these foreign embassies or consulates, their outward supplies are exempted. Their outward supplies are exempted. But they will receive various inward supplies, no? these UN bodies, multilateral financial organizations, or this foreign embassies or consulate to run their operations in India, they receive various inward supplies. They might purchase the goods, they might purchase the services, they might need capital goods. Now the government wants to give refund of GST whatever they have paid on their inputs also, on their outward supplies. Anyhow, they are exempted. Even the government wants to give refund of all the GST whatever they have paid on their inputs, on their inward supplies also. Now, for that purpose of claiming of the refund of their GST on inward supplies, for these organizations like UN bodies, multilateral financial organizations, or these foreign embassies or consulates, for them, for the purpose of granting refund to them, they will also be given one separate registration with UIN, unique identity number. They will have a separate registration number, which we call them as UIN, not regular registration. So this UIN will be granted to these bodies for the purpose of claiming refund of whatever GST they have paid on their inputs. Okay, so for that they will give UIN, and this is a centralized. This is not like GST, which is a state-wise registration. UIN registration will be centralized registration. It will be at one place. If you have taken registration, that will be valid all over India. So UIN registration is centralized. Next, procedure for registration and all I am not going through now, because that they will not ask you at the CFN level. Mostly they should not ask it. Next. So finally you will get the registration certificate and all. So it will contain GSTN, and that GSTN number you have to present it at your principal place of business, at your additional place of business, on your name boards, everywhere you have to present it. So this effective date of registration also I have covered. Now I will talk about CTP and RTP provisions. CTP and RTP provisions. So quickly, if I have to give you a brief, CTP means what? If a person from India only, but he is coming to some another state where he is not having any fixed place of business, there he will make a taxable supply and he will go back. Like let us say, for example, expos are happening, circus is happening, where people from other states will come and they will do some business in one particular state and they will go back. So this person will become CTP for that state where he doesn't have any fixed place of business. Now who is NRTP? NRTP means a person outside of India coming to India, doing some business and he is going back. Let us say IPL players. IPL season now. So this IPL season is all in this IPL season also foreign players are coming to India, participate in that IPL event, and they will go back. They don't have any fixed place of business in India. They might also fall under NRTP definition. So like that, CTP and NRTP. For CTP and NRTP, they have separate registration requirements. So when it comes to normal person, I told within 30 days from the date you become liable for registration, you are required to submit an application for registration. But that 30 days of time limit relaxation is not applicable for CTP and NRTP. CTP and NRTP are required to submit their application for registration even 5 days prior to the commencement of their business. Even 5 days prior to the commencement of the business itself, they are required to make an application for registration. Not just that, even they are required to make an advance deposit of tax. Even CTP and NRTP, if they have to get themselves registered, they have to make an advance deposit of tax. That means how long they are going to do the business in that respective state, or in case of NRTP, how long, what amount of supplies they could make in this duration. They have to estimate their tax liability and they have to make an advance deposit of the tax. Then only government will give them CTP and NRTP registration. And how long their registration will remain valid, sir? Their registration will remain valid for how much duration? So if you see here, validity of the registration period as specified in the registration application, or 90 days from the effective date of registration. So maximum CTP or NRTP will be given a registration validity up to 90 days. If he wants only for shorter duration, let us say he wants for 30 days only, he will the department will give that registration effective for 30 days. If he wants for 45 days only. But if he wants 150 days, no, department will restrict that to 90 days only. So either period specified in the registration application or 90 days from the date of grant of registration, whichever is later. However, this 90 days of time limit can be further extended by 90 more days. So initially, you will get a maximum time limit of 90 days. Your registration will remain effective for 90 days. If there is any valid reason, if you feel that if you want to extend your CTP or NRTP registration, you can make an application to the commissioner and they can extend that validity of the registration by 90 more days. By 90 more days, that registration period can be extended. Okay. And even for that extension also, you have to make an advance deposit of tax. Let us say initially you took the registration for 90 days. Now you are asking for extension for 60 more days. You have to make an application. Sir, I want to extend my CTP and RTP registration by 60 more days. Now you have to make an application. Sir, I want to extend my registration for 60 days. But they will extend that registration validity. Once again, you have to estimate what will be your tax liability for the coming 60 days. And you have to make an advance deposit of tax for that 60 days of tax liability. Then only they will grant you that extension. Even for extension also, you are required to make an advance deposit of tax. Next. Any special points here? There should be one rule. Rule 10A is there. Rule 10A. This is also one more frequently tested point, which is having connection with multiple places. So rule 10A, like that, one rule is there. Sir, what is that rule 10A? Rule 10A is regarding furnishing the bank account details. Rule 10A is regarding furnishing bank account details. So along with your application, whenever you are submitting the application, generally registration application will try to submit in GST REG 01. The application through which we have to claim the application through which we are required to submit an application for registration is GST REG 01. So in that GST REG 01, they will ask you so many details: your principal place of business, your additional place of business, your HSN code details, what activities you are doing. So like that, multiple details are required to be entered in that GST REG 01. So now what they try to say here is, in that GST REG 01, when you are submitting, you are not required to furnish the bank account details. At the time of submitting an application for registration, you are not required to furnish the bank account details. Even after you get the registration certificate also, you are permitted to furnish bank account details. Even after getting the registration certificate also, you can furnish the bank account details. Sir, but how long, sir? How long means within 30 days. Within 30 days from the date of grant of registration certificate, you are required to furnish the bank account details. Or before you file the first return, before you file the GSTR1 or IFF, whichever is earlier. So maximum within 30 days from the date of grant of registration, you can furnish your bank account details. Sir, what will happen if I get the registration certificate, but if I did not furnish the bank account details within 30 days from the date of grant of registration certificate, then what will happen? Then your registration will be liable to be cancelled. So if you want to stop your registration from getting cancelled, you have to furnish your bank account details maximum within 30 days from the date of grant of registration certificate. Understood? Right. So this is one more rule, rule 10A, which is going to be important. Thereafter, amendment related procedural formalities will be there. So like this, I have already given you one chart. You can just have a quick look at it. So in case if you have already got the registration certificate, but if you want to amend some details in your registration certificate, what you want to do, you want to amend your details in the registration certificate. Can I get it done? Yes. So there will be two kinds of amendments which you can do. One is core areas, one is core fields amendment, and other one is non-core field amendment. Sir, what is a core field amendment? Name of business without change in PAN, addition or deletion of stakeholders, and also principal place of business, additional place of business. These kind of details you can update it. These are core fields, and for core fields you have to submit an application for amendment. PO should accept it. PO should approve it. Then only the changes will be affected. And whatever other fields are there, those are non-core fields. So when you want to amend your non-core fields, no PO approval, nothing. You just submit an application, the details will get automatically amended. So this much you have to remember. So when you want to amend your details in the registration certificate, can you do it? Yes, you can do it. There will be two kinds of fields: core fields, non-core fields. For core fields, you need approval of the proper officer. He has to sanction, he has to grant you approval. Yes, these fields can be updated. In case of non-core fields, no approval, nothing will be required. Just you submit an application, the details will get automatically amended. No approval, nothing. So procedure, you can refer to it. Now comes the next point from this registration chapter: cancellation of registration. Cancellation. Section number 29 will talk about cancellation of registration. Section number 30 will talk about revocation of cancellation of registration. Section number 29 is going to talk about cancellation of registration, when your registration will be liable to be cancelled. Sir, what do you mean by cancelling registration? So you are no longer registered person. That means your registration is going to get cancelled. So when your registration will get cancelled, what is the procedure for cancellation and all? That is contained in section number 29. Now, section number 29 will talk about two circumstances where a person can voluntarily come forward and cancel his registration, or the cases where proper officer on suo moto basis, he will cancel the registration. The cancellation of registration can happen in two cases. What are the two cases? Number one, the registered person voluntarily, he himself can come forward and cancel his registration. Second case, suo moto cancellation by the proper officer. That means the registered person doesn't come voluntarily to cancel his registration, but the proper officer himself on his own motion, he is cancelling the registration certificate. That is what we call it as suo moto cancellation by the department. So like that, in two cases, cancellation can happen, either voluntary cancellation by the registered person or suo moto cancellation by the proper officer. So let us see that circumstances where the registered person either himself can cancel, or his legal heads can cancel, or PO can cancel. So genuine cases where registration will be cancelled. So either you yourself can cancel it or PO can cancel it. What are that circumstances? Number one, business discontinued. You are no longer continuing your business. You are discontinuing your business. You don't need registration. You can cancel your registration. Or that business is getting transferred fully for any reason, including the death of the proprietor. So you are transferring your business as a going concern to another person. Then also what you can do, you can cancel your registration. Amalgamated with other legal entity. Amalgamation is happening. Then also this old entity will cancel its registration. New entity will get the registration. Or demerger is happening. Or any other manner of disposing it off. Or if there is a change in constitution of business, let us say till now you are a proprietorship firm, but that proprietorship firm is getting converted into partnership firm. Now what will happen? In this case, PAN will change. PAN card will change. So this proprietorship firm has to cancel the registration and partnership firm has to get the new registration. Or taxable person is no longer liable to be registered under section number 22 or 24 who intends to opt out of voluntary registration. Or if you feel that you are no longer liable for registration either under section number 22 or 24, then also you can apply for cancellation of registration. So these are genuine circumstances where either the registered person himself or his legal heirs or the PO can cancel registration. So these are all the genuine cases. Now let us come to the extreme circumstances where the proper officer himself can cancel the registration on his own. The PO, without any initiation, without any request, without any initiation from the registered person's side, the PO himself can initiate cancellation proceedings. The proper officer himself will proceed ahead and cancel the registration. So when do you think that proper officer will take that extreme step? When do you think PO will take extreme step of cancellation of registration? When you have done some violations. So what are that violations? So there are some circumstances where the registration can be cancelled by the proper officer, including a retrospective date also. Even retrospective cancellation he can do, and after giving an opportunity of being heard. Sir, what are that extreme circumstances where the PO can cancel the registration even retrospectively? See here, these are all the prescribed violations. A registered person has contravened the prescribed provisions. Not all provisions, there are certain prescribed provisions are there. If you are a registered person, you are violating that prescribed provisions. So what are that prescribed violations? If I do, my registration will get cancelled. So these are the prescribed contraventions which make a registered person liable to be cancelled, which are mentioned in rule number 21. Sir, who are they? So number one, if they are not conducting any business from the declared place of business, so they have taken the registration, they have declared their place of business, but from that place of business, they are not doing any business. Or they are issuing invoices or bills without making supply of goods or services. Or if they are violating the provisions of section 177, anti-profiteering. If they are violating the provisions of rule 10A, they are not furnishing the bank account details. If they are availing ITC violating the provisions of section number 16, the person is taking input tax credit but violating the conditions. Even without fulfilling the conditions given under section number 16, he is claiming the ITC. Or furnishes details of outward supplies in GSTR 1 in excess of outward supplies declared in GSTR 3B. So what he is doing is in his GSTR 1 or 1A, he is declaring more outward supplies than the outward supplies which he is declaring in the GSTR 3B. So that means he is trying to declare more outward supplies in his GSTR 1. That means he is trying to pass on more credit to the recipients. But in his GSTR 3B, when actual payment of GST has to happen, in that GSTR 3B, he is declaring lesser outward supply. So more outward supplies in GSTR 1s when compared with the GSTR 3B. Next, if he violates the provisions of Rule 86B, what is this Rule 86B? We are going to see it in the input tax credit chapter. That 1% rule violation he is doing. Some big taxpayers, they can utilize only 1% of their output tax liability as ITC. He is violating it. Or he violates the fourth or third provisions to 23 sub rule 1. That means he is not filing the returns after revocation of cancellation. Anyhow, that is related to revocation point. But just remember that if he is violating the provisions of third and fourth provision to rule 23 sub rule 1. Or he is required to file returns under 39 months for each month or part thereof for a continuous period of 6 months and for continuous period of 2 tax periods. Sir, what is it? So let us say if you are a regular tax person. If you are a registered person, as I have told, one of the most important compliance which will happen if you are a registered person, one of the most important compliance which you have to do is you have to file the returns. Let us say you are a regular person, you are a registered person and you are under regular scheme. You did not opt for composition levy. And if you are remaining under regular scheme also, you are required to file returns. But there will be two options. Either you could be a monthly return filer or you could be a quarterly return filer. Even those people who are registered, who are under regular scheme, they will have two options. Either they can file monthly returns or they can file quarterly returns. In case if you are a monthly return filer, if you did not file your return for 6 continuous months, then your registration will be cancelled by the proper officer on suo motu basis. Without any request from you, he will cancel the registration on his own. On the other hand, if you are a registered person but you are already registered, and you are a regular person but you have opted for quarterly scheme, if you did not file your returns for 2 quarters, then also PO will on suo moto basis will cancel your registration. Clear? So this is in the case of regular scheme. Sir, what about composition dealer, sir? In case if you are a composition dealer, if you are a registered person but you have opted for composition levy, you are required to file one annual return in GSTR 4. If you are not filing that annual return beyond 3 months from the due date, if you are not filing your annual return beyond 3 months from due date is actually 30th of June following the end of the financial year. This due date is over. From the due date, 3 months is also over. Still, if you are not filing your annual return and if you are a composition dealer, then also your registration will be liable to be cancelled. Understood? So even default returns, even if you are a person who is making default in returns, then also your registration will be liable to be cancelled. So these 2 points are with regard to regular return filers. Sir, you told about composition, no? Where it is told? Here it is told. So if you are a composition taxpayer who has not furnished a return for a financial year beyond 3 months from due date of furnishing the return. So this is in case of composition scheme. And one more case where a person's registration will be cancelled on suo moto basis by the proper officer is if you are a voluntarily registered person. If you are not liable for registration, you voluntarily came forward. Even though you are not liable, you voluntarily came forward and applied for registration. But after getting the voluntary registration, you are not commencing your business within 6 months. You applied for registration by yourself, you voluntarily came forward and you asked for registration, we gave you registration, but after getting registration you are not commencing your business, 6 months is also over but you are not commencing the business, then also PO on suo moto basis can cancel the registration. Or you got your registration, after that if the department finds out that you got your registration by means of fraud, willful misstatement or suppression of facts, if the department finds out that you are obtaining your registration by means of fraud, willful misstatement or suppression of facts, then also PO can cancel the registration on his suo moto basis. Understood? So these circumstances you have to remember. Why? Because at the final level they will ask you comprehensive questions where you will be required to take what action should be taken. So they will give you one scenario and they will ask you in this case what and all actions can be taken by the department. So if it is falling under any of these prescribed violations, you have to write that PO on suo moto basis can even cancel his registration also. Like that some linkage will be there. So that's why you have to remember what are the circumstances where the proper officer on suo moto basis he can cancel the registration of the registered person. Okay. Right. So these are the circumstances. Now after that, what I will tell you is, right. So amount payable on cancellation of registration. This is important. So in case if the registration is getting cancelled either voluntarily or on suo moto basis by the proper officer, you will be liable to pay some amount. So what will be that amount payable on cancellation of registration? So they say that in case if your registration is getting cancelled, either debit the electronic rate or cash ledger. By what amount? By amount equal to ITC in respect of stock of inputs and inputs contained in semi-finished goods or finished goods stock on day immediately preceding the date of cancellation. I will talk about inputs and capital goods separately. So let us say if your registration is getting cancelled, then in respect you will be liable to pay some amount. What is the amount you are required to pay? In case of inputs, you will be liable to pay whatever ITC which is attributable to the inputs which are contained in stock or finished goods or semi-finished goods, or tax on such transaction value. If you supply that inputs, there will be transaction value, no? So on that transaction value there will be tax, no? So tax on transaction value, whichever is higher, that much amount you will be liable to pay on inputs. Inputs means goods. So that too on which date? Inputs on 1 day before the date of cancellation of registration. 1 day before that effective date of registration, effective date of cancellation. So that's what they say here. So if you come to this point, what will be the amount payable? ITC in respect of stock of inputs and inputs contained in semi-finished goods or finished goods on immediately preceding the date of cancellation, and output tax payable on such goods, whichever is higher, that much amount you will be liable to pay. Whichever is higher, that much amount you will be liable to pay on cancellation. On the other hand, with respect to capital goods, here also you will be liable to pay. If you are cancelling your registration, if some capital goods are there with you on day before the cancellation, if some capital goods are still there, even in respect of that capital goods also you are liable to pay some amount. How much amount you are required to pay? ITC. But here it is not ITC, reduced ITC. ITC reduced. How to calculate that reduced ITC? Take full ITC from the date of purchase, from the date of invoice till the date of we will assume the useful life as 5 years, that is 60 months. We will imagine the useful life as 60 months. And you determine what is the remaining useful life. What is the remaining useful life? Let us say, for example, I purchased a capital goods long ago. Till date of cancellation, I have used it for 40 months. I will take the useful life as 60. That means how many remaining months are there? 20. Total ITC I have availed is 1 lakh rupees. So 1 lakh into 20 divided by 60. So like that, you have to calculate the reduced ITC. In case of capital goods, the amount which you are required to pay on cancellation, how you have to calculate it? It will be ITC on that capital goods, but not full ITC, reduced ITC. How to calculate that reduced ITC? Take useful life as 60 months, determine what is the remaining useful life, multiply that with the ITC amount, you will get the reduced ITC. Or output tax payable. If you supply that capital goods, there will be output tax payable, no? So that output tax payable, whichever is higher, that much amount you are required to pay in respect of capital goods. So whenever you are cancelling your registration, you will be liable to pay the amount on your inputs also. You will be liable to pay the some amount with respect to your capital goods also. And this payment, this amount can be paid either by using the electronic credit ledger or cash ledger. If you have enough of balance in your electronic credit ledger, you can discharge this payment using electronic credit ledger. If you don't have enough of balance in your electronic credit ledger, you have to deposit the cash and discharge this liability. And in case of cancellation, how this liability discharge will happen? This liability discharge will happen by way of final return. In case if your registration is cancelled, you will be liable to file one return called final return. Through your final return, you will be required to discharge this liability with respect to inputs and capital goods. Through your final return, you will be required to do it. Okay. So these connections are important. Please do keep it at the back of your mind. Next. So this is what regarding procedure for cancellation and all. Now revocation. We will talk about revocation. Revocation of cancellation of registration. Sir, what is this revocation of cancellation of registration? Let us say, for example, your registration has been cancelled. Suo moto by the proper officer. You did not make a application for voluntary cancellation. If you yourself are going and submitting an application, sir, please cancel my registration, there is no way you are going to get it back. If you voluntarily went ahead and asked for cancellation of registration, you can't get it back. But in case if the PO on his suo moto basis, if the proper officer on his suo moto basis, if he has cancelled your registration, then you will be given one more opportunity to get your registration back. If proper officer on suo moto basis, if he has cancelled your registration, then they will be given one more opportunity for you to get back your registration. That process we call it as a revocation of cancellation of registration. So you are required to submit an application. Sir, dear proper officer, you have cancelled my registration. Please give me one more opportunity. I want my registration back. Like that, you can make an application for revocation of cancellation of registration. Sir, what is the time limit within which you have to submit that application for revocation of cancellation? You can submit that application for revocation of cancellation within 90 days from the date of service of the cancellation order. They will serve you a cancellation order, no? So from the date of that cancellation order within 90 days. Now many people will get confused here. One more point which they will test it at the final level, I'm telling you is, let us say for example, you got your cancellation order. You got your cancellation order on 30th of April. You got your cancellation order. That is the date of service of the cancellation order. Now, in that cancellation order, they will tell you what is the effective date of cancellation, from which date your cancellation will become effective. That date they will mention in the cancellation order. Let us say the date of service of cancellation order. You got your cancellation order on 30th of April. But in that order, they told that effectively my registration has been cancelled retrospectively. Can they do it, sir? Yes. The effective date of cancellation will be determined by the proper officer, which could be retrospectively also. So let us say in that cancellation order, they told that effective date of cancellation of registration is 1st of January. With effect from 1st of January itself, they are cancelling the registration. So now you want to get your registration back. Within how many days you are required to submit an application? Within 90 days from the date of service of cancellation of order. Not from the effective date of cancellation. Whenever you will get that order of cancellation, you will be served with the order of cancellation, no? So whenever you are getting that order of cancellation, whenever that service of order of cancellation has happened, from that date of service of order of cancellation, within 90 days, you are required to submit an application for revocation of cancellation. Okay, so this time limit you have to remember. So you can make an application within 90 days from the date of service of the cancellation order, not within 90 days from the effective date of cancellation, 90 days from the date of service of cancellation order. However, this 90 days period can be extended by commissioner or an officer authorized by him not below the rank of AC or GC for a further period of 180 days. for a further period of 180 days. So he can make an application within 90 days usual time limit, but if there is a valid reason, that 90 days of time limit can be extended by further 180 days. That means total you will have 270 days. 90 days without any extension, but if within 90 days also if you did not submit that application for revocation of cancellation, you make a, if there is a valid reason for that, you go and make an application to the commissioner. He can extend that time limit by 180 days more. That means maximum you can have 270 days for submitting an application for revocation of cancellation. So you will submit the application. So once you submit the application, that PO will take up your application, and after he's taking up the application, he will, if he feels that okay, for this person registration we have to give it back, then he will grant that revocation of cancellation of registration within 30 days from the date of receipt of application. If he files whatever application you have made is valid, and if he feels that, if he is convinced that okay, for this person we have to grant him the registration once again, let him give back his registration, like that, if the PO has convinced, then he will revoke your cancellation. That means he will give your registration back. If he is not satisfied, if he feels that even after you submitted the application, if he feels that no, this fellow doesn't deserve to get his registration back, he will give you an opportunity of being heard. Thereafter he will cancel, he will reject your revocation application. He will not give you registration back, but he will give you opportunity of being heard before cancelling your application. Okay, so this is what regarding revocation of cancellation of registration. Understood? Clear and comfortable, everybody? So this is what regarding major topics which are relevant, which will have a connection in the questions whatever you are going to write in your final examination at the CA final level. So with this, I am now trying to wind up this registration chapter. So I will wind up the registration chapter now. So next chapter, what we will try to do is, we will try to do charge of GST. The next chapter which we will pick up for revision is going to be charge of GST. Very, very important. There will be a compulsory question from this chapter, charge of GST also, that we will try to pick up and will try to do it. See what exactly we are going to learn in this charge of GST chapter is. So as I have told, we have broadly different kinds of mechanism by which the revenue of GST will go to the government. So one is forward charge mechanism and the other one is reverse charge mechanism. So now in this chapter, we are going to have a look at those goods or services which are notified on which RCM will become applicable. So RCM will not become applicable on each and every product or on each and every service, and even the choice has not been given to either the supplier or recipient to decide who will pay the GST to the government. It is not like something which a mutual agreement. So because of a mutual agreement between the supplier and recipient, they can't decide who will pay the amount of GST. So the government has released a notification. In that notification, they have notified certain goods or services on which RCM will become applicable. And whenever those goods and services which are notified are getting supplied, their recipient is only required to discharge the amount of GST. So let us see what are that cases. Right. So if you come to the goods here, so there are different kinds of goods which are taxable under RCM. So there are different categories of the goods which have been notified, which are taxable under RCM. So just you can have a quick look here, like cashew nuts, not shelled peeled, BD wrappers, tobacco leaves, and essential oils, silk yarn, raw cotton. Lottery is also getting covered under reverse charge mechanism. Used vehicles, seized and confiscated goods, old and used goods, waste and scrap, priority sector lending certificates, and even metal scrap. So metal scrap when supplied by an unregistered, here there is a slight mistake, you have to change it to unregistered. So even in case of supply of metal scrap, where the supplier is unregistered person and the recipient is registered person, then also RCM will become applicable. So slight change here, a small correction is required in this material. So here in case of supply of metal scrap, if the supplier is unregistered and the recipient is registered, then also that will get covered under RCM. So these are bunch of goods which have been notified which will get covered under reverse charge mechanism. But this is not the important part. The most important part is the services which are getting covered under reverse charge mechanism. We have to talk about the services which will get covered under reverse charge mechanism. So we will take up one by one each service we will try to do, and we will try to cover it. So first category of service which is covered under reverse charge mechanism is services by way GTA in respect of transportation of goods by road. So whatever services which GTAs are providing in relation to transportation of goods, and if the recipient is a specified recipient, then those services will get covered under RCM. So now what I will try to do is, for this GTA concept, there are exemptions also. For this GTA concept, there are some exemptions also. There are some forward charge. There are some reverse charge mechanisms also. All that I will try to cover it in one go. Okay, so all that I will try to do it in one go. Just give me 1 minute. Yes. So if you come here in GTA completely will try to cover it in one go. If you see here, in case of services of transportation by road, see this entire chat is relating to exemption. In case of goods transportation services, what and all are the exemptions? For that, we have one comprehensive chart. I will come back and revisit this chart when we are discussing exemptions. When we discuss the exemptions chapter, we will come back and revisit this chart fully, but I'm going to only explain a small aspect. GTA, I'm going to explain. This I will not come and cover it once again. So from this entire comprehensive chart, I'm going to cover only GTA part. What will be the taxability and what will be the charge of mechanism, whether forward charge, reverse charge in case of services provided by GTA, what will be the mechanism? So that we will try to see it here. Okay, so in case of services provided by GTA, so we need to first check what are the goods which are getting transported. So in case the goods are getting transported by way of a goods transport agency, but the goods which are getting transported falls under random category. The GTA is providing the services of transportation of goods, but the goods which are getting transported, they fall under random category. Sir, what is random? Relief material for victims, calamities, man-made disasters, accidents. A for agricultural produce. N for newspapers or magazines which are registered. D for defense or military equipment. O for organic manure. M for milk, salt and food grains. So if the GTA is providing the services of transportation by road, and if the goods which are getting transported falls under random category, any of the 6 category, then it will always be exempt. No one will pay the GST, neither forward charge mechanism nor reverse charge mechanism. These things are always exempted. However, no sir, the GTA is providing the services by way of transportation of goods, but the goods are not falling under random category. Then we'll go to the next step. So what is the next step? We have to check, okay, other goods are getting transported, but is the recipient falling under specified recipient? Is the recipient falling under specified recipient? Sir, who is that specified recipient? A factory, which is registered under Factories Act. A society registered under Societies Registration Act. Cooperative society registered under Cooperative Societies Act. Body corporate registered under any act. Partnership firm including LLP and association of persons, whether or not registered. So these people, factory, society, cooperative society, body corporate, partnership firm and AOP. So if these are the specified recipients, whether they are registered under GST or not doesn't matter. But if the recipients falls under any of this category like factory, society, cooperative society, body corporate, partnership firm including LLP and AOP, and also any other registered person. Registered person means what? A person who is registered under GST, other registered person including registered CTP, or if the recipient is a CTP, casual taxable person who is registered. So if the recipient falls under any of this specified recipients category, then it will be taxable under reverse charge mechanism. These recipients will be liable to pay the amount of GST with the government. Sir, who are that specified recipients, sir? A factory, society, cooperative society, body corporate, partnership firm, whether or not registered, and a GST registered person including a registered CTP. So if the recipients falls under any of the specified recipients category, then that GTA services will be taxable and it will be payable under RCM. These recipients are required to discharge it under reverse charge mechanism. Okay, next. But however, if the recipient is a registered person, but the recipient of the GTA services is a department or establishment of central government or state government or union territory or local authority or government agency who has taken registration only for deducting TDS under section number 51, but not for making any taxable supply. See, what did I say? If the recipient is a registered person, then RCM will become applicable, no? But one exception is there. What is that one exception? Recipient is registered, but the recipient is a department or establishment of central government or state government or local authority or government agency, but they have taken registration only for deducting TDS under section number 51, but not for making any taxable supply. Then what will happen? Then that service is exempted. No RCM, no FCM. Then that service will be exempted. Sir, any other recipients, if the recipient of GTA services is any other recipient, then in all that circumstances, it will be exempt. If the recipient is any other recipient, apart from this specified recipients, if any other recipient has received the GTA services, then it will be exempt. Okay, so this is one comprehensive chart which is covering all kinds of GTA services, when exempted, when taxable, when RCM and all. So once again, if I try to quickly revise it, in case of services provided by GTA by way of transportation of roads, First, we have to check, is the goods which are getting transported falling under random category? If the goods are falling under random category, directly exempt, no one will pay the GST. Then we need to check, sir, goods are not random, but is the recipient falling under specified recipient? So that list of specified recipients I have given here. So if the recipient falling under specified recipient, yes. If the answer is yes, then it will be taxable under RCM. Recipient only will pay the amount of GST. But one exception, recipient is registered, but the recipient is department or establishment of central government, state government, local authority, government agency who has taken registration only for the purpose of deducting TDS under section number 51, but not for making any taxable supply. Then it will be exempt. No one will pay the GST. Sir, recipient is other recipients, sir. Other than the specified recipient, if recipient is some other recipient, sir, then it is completely exempt. No one will pay the amount of GST. Understood? So now coming to this RCM point. I told that if the recipient is a specified recipient, then they will pay the GST under RCM, no? If the recipient is a specified recipient, then they will pay the GST under RCM, no? But here also they have given one option. To the GTA. Now, if the GTA takes the registration and if they exercise, even they can exercise the option to pay the GST under forward charge mechanism also. What one more option they have given? So if the recipient falls under any of the specified recipients, RCM, no. But here there are some exceptions given. Even RCM will not become applicable. When, sir? When that GTA, when that goods transport agency has come forward, they have taken the registration and they exercised the option. They are coming forward and saying, sir, if even though this service is getting covered under RCM, but we want to pay the GST under forward charge mechanism, sir. We will come forward and we will pay the GST under forward charge mechanism, sir. If they could make that declaration, then forward charge mechanism will become applicable. If the GTA comes forward, in these cases, even though RCM will become applicable, if the GTA comes forward and exercises the option to pay the GST under forward charge mechanism, if they have taken registration, then FCM only will become applicable. So here, if you read it, notwithstanding content, nothing contained in this entry shall apply. That means RCM shall not apply. When, sir? When supplier, who is supplier, sir? GTA service provider. When GTA is registered and they have exercised the option to pay GST on to pay tax on GTA services under forward charge mechanism, and they will issue the tax invoice, and in that invoice also they are making declaration. What declaration? So they will give the tax invoice, no? GTA will give tax invoice, no? In that tax invoice, they're making a declaration. So even though our services are getting covered under RCM, we are exercising the option to pay the GST under forward charge mechanism. Like that, they have to give a declaration. If they could take the registration, they exercise the option and they make a declaration, then GTA service provider only will pay the amount of GST under forward charge mechanism. Able to understand? And in case if the GTA wants to pay tax under forward charge mechanism, if the GTA exercises the option to pay, GTA has exercised the option to pay tax under forward charge mechanism, sir, what will be the rate of GST? See, in case if the GTA does not exercise the option to pay under forward charge mechanism, then recipient will pay. Recipient has to pay if the recipient falls under specified recipient, and if the GTA has not taken registration, if they have not exercised the option to pay GST under forward charge mechanism, then RCM will become applicable. So in case if the recipient is required to pay GST under RCM in respect of GTA services, what will be the rate of GST? 5%. 5%. If the recipient is paying the GST under reverse charge mechanism, the rate of GST is going to be 5% only. 5% only. But in case if the GTA has exercised the option to pay the tax under forward charge mechanism, then what will be the rate of GST? There are two options available for the GTA service provider who wants to pay the GST under forward charge mechanism. Sir, what are the two options? One is not 12%, 18%. There is an amendment here, 18%. See, initially the institute has released a supplementary material. In the supplementary material, they did not include this. So taking that supplementary material, I have done all this material. I have included all the changes which are applicable. All the amendments are included here. But after some period of time, they changed the supplementary material. They uploaded another version of supplementary material. In that supplementary material, they have added this point. This 12%, they have changed it to 18%. So that's why this was not yet changed, but now I am changing it, 18%. Okay, so this we have taken care in the class. Those who have attended our class, though for them we have already clarified it, but since in the marathon some other students also will be there, no, for their sake we are keeping it here. So in case if the GTA exercises the option to pay tax under forward charge mechanism, it will have two options. Either it can pay 18% GST or 5%. So if you are paying 5%, you are not liable to ITC. You can't take ITC. You can discharge your tax liability at the rate of 5%, but you can't take ITC. But in case if you want your ITC on your input services, you have to pay the GST at the rate of 18%. Previously it used to be 12%, but now it is 18%. Understood? Clear? Clear and comfortable? Right. So this is what regarding GTA services, when taxable, when not taxable, when exempted, when RCM, when FCM, everything I have comprehensively covered. So first category of service which is getting covered under RCM, we have covered. Then 2 and 3, second and third point is talking about legal services. Legal services, when they will get covered under RCM, even for that legal services also we have an exemption. So when RCM, when exemptions, for this also I have a chart here. Let us try to cover it with the help of the chart. So if you come here, right. So legal service related exemptions, as you could see here. See, in case if the services are provided by advocate other than senior advocate or form of advocates. So when I say legal services could be provided by an advocate. Individual advocate can provide it, or senior advocate can provide that legal services, or even the advocates can create a firm. Through that firm of advocates also they can provide the legal services. So when we say legal services can be provided either by a individual advocate, or they could be provided by a senior advocate. Sir, who is senior advocate? Not who is senior citizen. Senior advocate is an advocate with certain years of experience and is recognized by the Bar Council as a senior advocate. Or these advocates can come forward and create a firm of advocates. Like we auditors are creating audit firms, even this firm of advocates also can be created, and through that also they can provide the services, right? So now advocate, firm of advocate, this we will club into one category. Services provided by advocate or form of advocates, when they will be taxable, when they will be exempted, when RCM. That is this chart. Senior advocate alone we have separate chart, because there is a little change between the individual advocate, form of advocates, and services provided by senior advocate. There are minute changes. So that's why what we are doing. So in the first chart, we are talking about services provided by advocate and form of advocates other than senior advocate. Then we have second chart where it will talk about services provided only by senior advocate. Okay. So first we will see what about the status of services provided by an individual advocate other than senior advocate or form of advocates. So here what they have told us, if one individual advocate or form of advocates other than senior advocate provide the services to another advocates or form of advocate. If an individual advocate or a form of advocates provide the services to another advocate or form of advocates, those are always exempted. No one will pay the amount of GST. Similarly, in case if the individual advocate or form of advocates, if they are providing the legal services to a central government, state government, union territory, local authority, and government entity, then also it is exempted. That means if the recipient is government and government related entities, exempt. If the recipient is a non-business entity, if an individual advocate or form of advocates, if they are providing legal services to a non-business entity, like divorce case they are fighting or family disputes they are fighting, those services are also exempt. No one will pay the amount of GST. Then, sir, this individual advocate or form of advocates other than senior advocate, they are providing services, sir. Recipient is a business entity, sir, but that business entity is also a small business entity. So legal services are provided by individual advocate or form of advocates to a business entity, and that business entity is a small business entity, sir. How to identify small business entity? Recipient is such a business entity whose aggregate turnover is less than or equal to applicable threshold limit in the preceding financial year. So recipient is a business entity, sir, but it is such a recipient, but it is such a business entity, but it is such a business entity which is a small business entity, sir, whose aggregate turnover does not exceed the applicable threshold limit in the preceding financial year, sir. So that they are identifying it as small business entity, and even they have given exemption for them also. So only in one case it will be taxable here. Legal services, only in one case it will become taxable. What is that one more case which is left out? Recipient is a business entity and their aggregate turnover is more than applicable threshold limit in the preceding financial year. Big business entities. The recipient is a business entity, and that business entity is such a business entity whose aggregate turnover is more than applicable threshold limit in the preceding financial year, sir. So this is the only last left out case. So in that case it will be taxable. In the last case it will be taxable under reverse charge mechanism. In the last case it will be taxable, and also when it is taxable it will be taxable under reverse charge mechanism. Able to understand? So this is what the status of services provided by individual advocate or form of advocates other than senior advocate. Sir, now what about services provided by the senior advocate? What about services provided by the senior advocate? Here also more or less the things are going to remain the same. In case if the services are provided by senior advocate, if the recipient is central government, state government, union territory, local authority, government entity, exempt. If the recipient is a non-business entity, exempt. If the recipient is a business entity but small business entity, how to identify small business entity? Which is having an aggregate turnover less than or equal to applicable threshold limit in the preceding financial year, then also it is exempt. And if the recipient, who is left out? If the recipient is a large business entity. Sir, what is large business entity? Which is having an aggregate turnover more than applicable threshold limit in the preceding financial year. Here it includes even the recipient who is an individual or form of advocates. Then it will be taxable under reverse charge mechanism. So if you see the difference between the first chart and second chart here, in the first chart, the services provided by individual advocate or form of advocates to another advocate or form of advocates is also exempt. But that relaxation they have not given here in the case of senior advocate. That means if the senior advocate is providing the service to another advocate or form of advocates, those services will become taxable. So that's what it is getting covered here in the last. Okay, so this point is not specifically given for senior advocate. That's the only difference. Remaining all will remain the same. Okay, right. So this is what regarding services provided by either individual advocates or form of advocates. Now even arbitral tribunals also provide the services. Arbitral tribunals also will provide services. So when it comes to arbitral tribunal, when taxable, when exempted, even services provided by arbitral tribunal where the recipient is central government, state government, union territory, local authority, government entity, exempt. To a non-business entity, exempt. To a business entity but a small business entity whose aggregate turnover is less than or equal to applicable threshold limit in the preceding financial year, then also exempt. But if the recipient is such a business entity whose aggregate turnover is more than applicable threshold limit in the preceding financial year, then it will be taxable under reverse charge mechanism. So this is what regarding arbitral tribunal services. Okay, right. So legal services also we have covered. The next bunch of services which are covered under RCM, legal services we have covered. Now coming to next category of service which is covered under RCM, sponsorship services. Sponsorship services also are getting covered under RCM, but sponsorship services will get covered under RCM only when the supplier should be other than body corporate. Supplier should be other than body corporate. Recipient must be either a body corporate or partnership firm. When I say partnership firm, it includes LLP also. For the purpose of GST, wherever I am saying partnership firm, that includes LLP as well. So sponsorship service, tell me when it will get covered under RCM. Sponsorship services will get covered under RCM only when the supplier is other than body corporate and the recipient is either body corporate or partnership firm. Both conditions must be fulfilled. Supplier should be other than body corporate, recipient should be either a body corporate or partnership firm, including LLP. Then only RCM will become applicable. So then we have 5 and 6. I think 5A. These are all related to government related services. So for government related services, I will currently keep them on hold now. Why? Because I have a comprehensive chart. For government services or for services which are provided by government, I have a very comprehensive chart regarding services provided by government in exemptions. So there are very bunch of services which government will provide. In many cases, it will not be supply. In some cases, it will be supply. Even in that cases also, in many cases, it will be exempted. If it is taxable in few cases under forward charge mechanism, in few cases under reverse charge mechanism. So like that, we have one complete bunch. So I have consolidated all that discussion regarding government services into this comprehensive chart. This I will try to explain. This we will try to revise along with the exemptions chapter, not now. So that's why what I will ask you to do is, for the time being now, this 5 and 5A, you keep it on hold. This I will talk about it later. This will try to cover it along with exemptions. Then we have renting related services. 5AA, 5AB. These two are there, which are talking about renting related services. This also, I will try to explain it now only with the help of one chart. Listen carefully. Yes, renting of immobile property. Just 1 minute. So this is the chart relating to renting of immobile property. So this I will try to explain. Exemptions and when RCM, when FCM, that I will try to complete in one go. Right, see here. So renting of immobile property, when taxable, when exempted, when RCM, when FCM. So all that along with the exemptions, I'm covering it here. See it here. So in case of renting of immobile property, is happening. First, we need to check, is the renting of immobile property is a residential dwelling or other than residential dwelling? Sir, what is residential dwelling? Residential dwelling means a place which is meant for residential purposes. 1 BHK flat, 2 BHK flat, which is fit for staying for your residential purposes, that we call it as residential dwelling. So in case if there is service of renting of immobile property, if someone is providing the services of renting of immobile property, first we should check whether that immobile property is a residential dwelling or other than residential dwelling. If renting of immobile property is happening, but if it is a residential dwelling is being rented. So in case of renting of residential dwelling, if the residential dwelling is getting rented out for residential purposes only, renting of residential dwelling is happening and that renting is also happening for residential purposes. Let us say for example, 1 2 BHK flat is there, that 2 BHK flat has been taken on rent for residential purposes only. And if the recipient is an unregistered person, renting of residential dwelling for residential purposes, if the recipient is unregistered person, exempt. And if the recipient is a registered person, sir, recipient is a registered person, he is taking that a residential dwelling on rent for residential purposes only. And if the recipient is a registered person, he is an individual and he is using his for his own residence, not for any office purposes. And rent also he is paying on his own account, not from his business. So renting of residential dwelling where the recipient is registered, but if the recipient is an individual person, he is using that property for his own residence and also he is incurring the expenses on his own account. When these three conditions are satisfied, then also it is exempt. In all other cases, what will be other cases? Other cases will be where the recipient of residential dwelling is a registered person. He is doing it for residential purposes only, but the recipient is a registered person but not individual. Like a partnership firm has taken a 2 BHK flat on rent, or a company has taken a 2 BHK flat on rent. That flat also they are using it for residential purposes of their guest only. In that cases, exemptions will not become applicable. In those cases, it will be taxable under reverse charge mechanism. In those cases, it will be taxable under reverse charge mechanism. So once again, if I tell you, first you need to check whenever renting of immobile property is there, you need to check, is it a residential dwelling? If it is a residential dwelling, then you need to check for what purposes. If it is for residential purposes or commercial purposes. If it is for residential purposes, if the recipient is unregistered, let us exempt it. If the recipient is a registered person but is an individual using it for his own residence on his own account, then also exempt. In all other cases, it will be taxable under reverse charge mechanism. Okay, next. But in case if the residential dwelling is getting rented out, but for commercial purposes, 2 BHK flat only, but you are giving it on rent for commercial purposes. For commercial purposes, you are giving it. 2 BHK flat, one audit firm is taking to run their audit firm. So that is a residential dwelling for commercial purposes. In case of renting of residential dwelling for commercial purposes, it will be taxable. It will be taxable. If the recipient is registered, then reverse charge mechanism. If the recipient is unregistered, then forward charge mechanism. If the recipient is registered, RCM. If the recipient is unregistered, then forward charge mechanism. Supplier will collect the amount of GST. But here also, supplier will collect the amount of GST only when his aggregate turnover exceeds the applicable threshold limit. So here under forward charge mechanism, I am saying, so that means supplier only should collect the amount of GST. But supplier will collect the amount of GST only when he is registered or liable for registration. But here also one small star mark I have kept. What is it? In case if the recipient is unregistered, a residential dwelling is given on rent, but for commercial purposes. But if it is for accommodation services, like hostel services, accommodation services, where monthly rent is less than or equal to 20,000 rupees and minimum period of stay is 90 days, then it will be exempt. Then it will be what? Exempt. So even though residential dwelling, you are using it for commercial purposes, but that you are giving it for you are using it for commercial purposes. But if the recipient is unregistered person, let us say for example, paying guest, I'm an unregistered person. I went to a 2 BHK flat. There is one 2 BHK flat. I went to Hyderabad. In the Hyderabad, I wanted to stay. I wanted to stay in a PG. I'm an unregistered person. I'm an employee of some company. I'm an unregistered person. I want a PG. So I went to one flat. A 2 BHK flat is there. That flat owner is giving that as PG. So that is getting used for commercial purposes. That is a 2 BHK flat, but getting used for commercial purposes. So he is giving that PG on rent to me. I am an unregistered person. But in case if the monthly rent is less than or equal to 20,000 rupees, if the minimum period of stay is for 90 days, then that is exempted. So this is what will happen in case of renting of residential dwelling for commercial purposes. Now this is regarding residential dwelling. Now come to other category of renting. So renting of immobile property other than residential dwelling, like shops I am giving on rent, land I am giving it on rent. So that is what other than residential dwelling. In case if it is renting other than residential dwelling, if the supplier is unregistered person, recipient is registered person. If the supplier is unregistered person, but the recipient is registered person, then in that case, RCM, recipient only will liable to pay the amount of GST. In all other cases, whatever could be the other case, see if the supplier is registered, recipient is unregistered, then I told RCM. In all other cases, it will be covered under forward charge mechanism. In all other cases, it will be covered under forward charge mechanism. But here also, this exemption will become applicable if it is an accommodation service. If the monthly rent is less than or equal to 20,000, minimum period of stay is 90 days, then it could be exempted. Understood? Clear and comfortable? So this is what regarding renting of immobile properties when RCM, when FCM, when exempted. So everything I tried to summarize it here in the form of this chart. This could be a one single point of reference for you. For quick revision, you can use this chart. Okay, clear? So once the marathon gets over, I will upload this marathon notes on the website. So from there you can refer it. Okay. Right. So this is what regarding renting of immobile property. So here, along with this point, even I have clarified the exemptions also. Exemptions also I have clarified. So everything we have covered in one single chart. Right. So let us come back. Next category of services which are covered under RCM. So we have two more cases regarding construction related activities. For construction services also, two activities related to RCM are there. What are they? Services by way of TDRs, services by way of transfer of development rights, or FSI for construction of a project. Let us say you are a person, you are transferring the TDRs or FSIs for construction of a project, and the recipient is a promoter. Promoter is receiving it. This will get covered under RCM. Promoter only will pay the amount of GST on the transfer of TDRs or FSI. Similarly, any person, supplier is any person, and the service which is getting supplied is long-term lease of land. If I am a owner of a land, I am giving a long-term lease of land. Sir, what is long-term lease? When we will consider as long-term lease, when the lease is given for greater than or equal to 30 years, against consideration in the form of upfront premium, which we call it as premium, salami, cost, price, development charges, or by any name, whatever you call, or by periodic rent. Either you are getting some amount, upfront amount, or you are getting periodic rent for that. In that cases also, promoter only will pay the amount of GST under reverse charge mechanism. Okay, so two cases related to real estate sector. One is transfer of TDRs or FSIs. The promoter only will pay the GST under RCM. Long-term lease of land greater than or equal to 30 years for either upfront amount or for periodic rent. So that also will be paid by the promoter only under reverse charge mechanism. Okay, next. So these are all related to real estate sector. I will say 5AA, 5AB, 5B, 5C. All these are related to the immobile properties. Now we will come to the next one. Next category of service which will get covered under RCM. So directorship services. Services provided by a director of a company or body corporate to a company or body corporate located in taxable territory, that will get covered under reverse charge mechanism. Sir, what they are trying to say here? Let us say there is a company X Limited. Now they have appointed one director. So he is providing director services, directorship services also you can say. So he is acting as a director for that company. In return, this director will be getting remuneration from that company. So companies will appoint directors. For that directors, they have to pay them remuneration. So the service here, the service provider is a director. Service recipient is that company or body corporate located in the taxable territory. Now they are saying this will get covered under reverse charge mechanism. So here, who is the supplier? Director. Who is the recipient? That company or body corporate. So now they are saying this will get covered under RCM. Company only will pay the amount of GST on that remuneration to the government. But here there is one small thing which we have to understand it here. Now some companies are arguing. So when director is providing us services, when director is providing the services to us, he is an employee. Some companies have started arguing when the director is providing the services, he is an employee of our company. So services provided by the employee to the employer in the course of employment, that is getting covered under Schedule 3, which is neither supply of goods nor supply of services. It is completely outside of the GST purview, which we have read yesterday in the supply chapter. Saying that in case of services provided by employer to the employee to the employer in the course of employment is neither supply of goods, not even supply of services. So companies started arguing services provided by a director are in the capacity of employee in the employment, so they are not supply only. But it is not actually the case. Why? Because agreed that some directors will be in the capacity of an employee. Let us say managing director, whole-time director, they will be working full-time with the company. They are like employees. For them, whatever salary that is whatever remuneration that is getting paid, that is having the nature of salary. But there will be some independent directors who will not be working like employees. Once in a while, they will come and participate in the board meeting. In return, they are going to get the sitting fee, which is not in the nature of salary. So like that, confusion was coming. Which director will be considered as employment? Which director is not considered in the course of employment? That confusion was coming. So department has given a circular saying that, so one single thing which will sort out all this issue, whenever remuneration is getting paid to the director, check under which section of the Income Tax Act TDS is getting deducted. What simply the circular has told, whenever the remuneration is getting paid to the director, check. So whenever you are paying remuneration to the director, you are required to deduct TDS under Income Tax Act. No. So you check under which section the company is deducting the TDS for remuneration. In case if the remuneration paid to the director is subjected to TDS under section 192, if the remuneration paid to the director is subjected to TDS under section 192, that is a salary. That is a remuneration paid to the director in the capacity of an employee under the contract of employment. That is not supply. If it is not supply, no GST on that component. Neither the company nor the director, no one will pay the amount of GST on it. However, if the remuneration paid by the company to the director is subjected to TDS under section 194J, it was subjected to TDS under section 194J. Then it is a remuneration not paid for employment. It is a remuneration paid for professional services. It will not go to Schedule 3. That means it will not get covered under Schedule 3. If it is not getting covered under Schedule 3, it will fall under supply definition. If it falls under supply definition, then GST will become applicable. Here RCM will become applicable. Company will only pay the amount of GST under reverse charge mechanism. Understood? So here the deciding factor, whether RCM will become applicable, RCM will not become applicable, whether supply, not a supply, all that is based on one single point. Whenever the company is paying remuneration to the director, under which section TDS is deducted under Income Tax Act. If the TDS is deducted under section 192, it is salary, not a supply, outside of the GST purview. If it is deducted to TDS under section 194J, it is a professional service, it will be a supply, GST will be applicable, RCM will become applicable. Company is only liable to pay the amount of GST under RCM. Understood? So this is what regarding directorship services. Now let us come to other kind of services. Now we will talk about financial sector. When I say financial sector, banking and all will come here. Banking, insurance, all the services are there that we will try to cover in one go. So when it comes to financial sector, services supplied by an insurance agent. Insurance agents will provide the services, no? So services provided by insurance agent, where the supplier is an insurance agent, and who is the recipient? Insurance company. So insurance agent is providing the services to the insurance company, no? So that services provided by insurance agent to an insurance company will be covered under reverse charge mechanism. So for selling the insurance policies, insurance company will pay him some commission, no? On that commission, who will be liable to pay the amount of GST? Insurance company only. So being the recipient, they are only liable to pay the amount of GST under RCM. Next, recovery agent services. If someone is providing the services of recovery agent, who is a supplier? Recovery agent is a supplier. Who is the recipient? If the recipient is a banking company, financial institution, or even an NBFC which is located in the taxable territory, it will get covered under RCM. So recovery agent providing the services, providing recovery services to a banking company, financial institution, NBFC located in the taxable territory, covered under reverse charge mechanism. Next, 9(9)A, I will come back to that later. Next one, I will see this one, 10th one. 10th is also related to the financial sector only. So members of overseeing committee, RBI will have a committee called overseeing committee. In that overseeing committee, some industry experts will be appointed as members. These members of overseeing committee will provide the services to the RBI, where RBI will pay them some remuneration. So members of overseeing committee will provide the services to the RBI, for which RBI will pay them the remuneration. So who is the supplier? Members of overseeing committee. Who is the recipient? RBI. I am saying this will get covered under RCM. That means who will pay the GST? RBI being the recipient of the services, they are liable to pay the amount of GST to the government. So members of overseeing committee supplying services to the RBI. Next, services provided by direct selling agents. And which direct selling agent? Individual direct selling agent. Services provided by individual direct selling agent to a banking company or NBFC located in the taxable territory will get covered under reverse charge mechanism. So direct selling agents services will get covered under RCM only when the supplier is a individual. Now many students often get confused here. If you look at the recovery services will get covered under RCM irrespective of what is the status of the supplier. So that recovery services could be provided by individual, that recovery services could be provided by partnership firm, that recovery services could be provided by body corporate, it will always get covered under RCM. But when it comes to direct selling agent services provided by direct selling agents to a banking company or NBFC located in the taxable territory, that will get covered under RCM only when the DSA is an individual who should not be a body corporate or partnership firm or LLP. Only services provided by individual DSAs will get covered under RCM. Which means if a body corporate or partnership firm, if they are providing the DSA services to the banking company or NBFC located in taxable territory, then RCM will not become applicable, FCM only will become applicable. But for recovery services, there is no such restriction. Recovery services could be provided by anybody. Individual, body corporate, LLP, partnership firm, in all the cases RCM will become applicable. But for direct selling agents, only when the supplier is individual, then only RCM will become applicable. Next, we have something called business facilitator, business correspondent. Related to this business facilitator, business correspondent, there are some exemptions also. Let us try to understand it. Right. So just give me 1 minute. Yeah, this one. See, these are all some things which we have used in our regular class. So that I am accumulating it all at one place for our easy revision. Right. So there will be two kinds of services in relation to banking industry. One is business facilitator services, other one is business correspondent services. See, I'm not going into detail who will be business correspondent, who will be business facilitator. I'm not going into the detailed manner that we have given in the material. When you have a free time, you can read it. But there will be two kinds of service providers who will provide services to banking company. One is business facilitator and the other one is business correspondent. So now, if you see here, in respect of rural area accounts, in case if the services are provided in relation to the accounts of a rural area, there is a rural area, to that rural area accounts, in relation to rural area accounts, if the services of business facilitator or business correspondent is getting provided, in that case, services provided by business facilitator to the banking company in relation to accounts of rural area, exempt, no GST. Not just that, if this business facilitator is having an agent, that agent of business facilitator will provide the services to business facilitator in relation to rural area accounts, exempted. Same thing will become applicable for business correspondent also. So services provided by business correspondent to the banking company in relation to the rural area accounts, exempt. Services provided by agent of business correspondent to a business correspondent in relation to rural area accounts, exempt. So what I want to say here is, in relation to accounts of the rural area, services provided by the business facilitator or business correspondent or their intermediaries like agents, everything is exempt. Now we will get urban areas. Sir, what about urban areas? What about services provided by business correspondent, business facilitator and their agents in relation to urban area accounts? So in that cases, what they say here is, in case of urban area accounts, services provided by business facilitator to the banking company, BCom here means banking company, services provided by business facilitator to the banking company in relation to urban area accounts, it will be taxable, and it will be taxable under reverse charge mechanism. It will be taxable under reverse charge mechanism. That means banking company only will pay the amount of GST under RCM in relation to services provided by business facilitator to the banking company in relation to urban area accounts. That is taxable and RCM will become applicable. Now these business facilitators will have agents. These business facilitators will have agents. Now these agents will provide services to the business facilitator in relation to urban area accounts, that will be taxable under forward charge mechanism only. That means these agents only will collect the amount of GST and pay it to the government. Okay, so two wings here, services provided by business facilitator to the banking company in relation to urban area accounts, taxable under reverse charge mechanism. Now services provided by agent of business facilitator to the business facilitator in relation to urban area accounts will be taxable under forward charge mechanism. Now, if you come to business correspondent, reverse is the case. Services provided by business correspondent to a banking company in relation to urban area accounts, it will be taxable under forward charge mechanism. That means in this case, this business correspondent only will pay the amount of GST to the government since being a supplier. But however, agent of business correspondent, if they are providing services to the business correspondent in relation to urban area accounts, this will get covered under RCM. Being the recipient, business correspondent will pay the amount of GST with the government. Understood? Clear? So whatever we have read for business facilitator, that will be exact reverse in the case of business correspondent. Understood? But one point here, in relation to rural area accounts, the services of everybody in this chain is exempted, but only it will be taxable in the case of accounts related to urban area. But here also in few cases RCM, in few cases FCM. So that's what I have tried to keep it here in this diagram. Okay, so kindly do refer it. So here also I have explained that RCM, FCM, business correspondent, business facilitator in the banking industry, along with RCM cases, along with exemptions, all I have covered in one go. Next. Okay, so this also we are done. Then what else is left out? That's all. I think these are all the services related to banking and financial sector. These are all the services related to banking and financial sector. So that bunch we have covered. Now we will talk about some copyright related services. There are some copyright. There are some copyright related services, intellectual property rights, IPR related services, which are also covered under RCM. Let us try to see when. So first one, services by way of transfer or permitting use or enjoyment of a copyright covered under 13(1) of the Copyright Act relating to original dramatic, musical or artistic works. And who is service provider? Service provider is music composer, photographer, artist or the like. And what service he is providing? He is providing the services by way of transfer or permitting use or enjoyment of a copyright. To whom that service is getting provided? The service recipient is music company, producer or the like, located in the taxable territory. This will get covered under reverse charge mechanism. Sir, what they are trying to say it here? Simply, if I have to put it, let us say I'm a music composer. I composed one song. For this song, I have taken copyright. So one day, one music company has approached me. Let us say, for example, T Series has approached me. So T Series approached me and told, sir, you please permit us to use your copyright. You have composed a song. For that, you have taken a copyright. No, you do one thing. You please give us right. You please transfer that copyright to us. You please permit us to use or enjoy that copyright, so that we will use that song somewhere. Either we'll post it in our social media platforms or we'll release some albums, whatever it is. You please transfer that copyrights or permit us to use or enjoy that copyright. In return, the music company is paying them some remuneration, generally in the form of royalties they will pay. So here, who is a service provider? Service provider is music composer. Who is a recipient? Music company. What service is getting provided? Permitting or transferring or permitting use or enjoyment of a copyright. So now they are saying this will get covered under RCM. RCM means what? Recipient, being a music company is a recipient, they will only be liable to pay the amount of GST to the government under reverse charge mechanism. Same thing will happen even to the artist also. Let us say I have drawn one painting. So for that painting, I have taken copyright. So some company, some producer came to me and told, sir, you have taken a copyright for your artistic work. No, you please temporarily transfer or permit use or enjoyment of copyright. For that, we will pay you some remuneration. This also will get covered under RCM. The same thing will become applicable even in the case of a photographer also. Let us say I am a photographer. I have taken one wildlife photography, one wild animals photographs I have taken. For that photographs also I have taken copyright. One day, let us say for example, some magazine company approached me and they asked me to transfer that copyright or permit use or enjoyment of that copyright related to that photographs, in which they will pay me remuneration. So here also supplier is that photographer, recipient is that magazine company. Here also it will get covered under RCM. On that, whatever GST is applicable, that is required to be paid by that recipient only, magazine company or producer in our example. So this is what they try to say it here. Understood? Right. So this is one kind of copyright. Another one, the same thing they have told even for author also. So here what they are trying to say here is, let us say I'm an author. I wrote one book. I wrote one novel. So for that novel also I will take a copyright. So I wrote one book. For that book I have taken a copyright. So one day what happened is one publisher approached me. Let us say for example Penguin, that is one big publisher in India. They have approached me and told, sir, you have written a novel, no? So for that you have already taken a copyright. You do one thing, you transfer that copyright to us, or you permit us to use or enjoy that copyright. What we will do is we will publish your book. If you transfer the copyright to us, we will publish your book, we will sell it, and in return we will give you some remuneration. So here I am an author. I am providing the services in relation to temporary transfer or permitting use or enjoyment of a copyright in relation to an literary work to a recipient. Who is recipient? Publisher. Now they are saying this will also get covered under RCM. This will also get covered under RCM. So on that services, whatever I have provided by way of permitting or transferring or permitting use or enjoyment of my copyright in relation to original literary works to a publisher who is a recipient, this is also getting covered under RCM. So here the publisher only will pay the amount of GST under reverse charge mechanism. However, in this author's case, there is one relaxation provided. In this case, for authors, only for authors, not for music composers, not for artists, and not for photographers. For them, always reverse charge mechanism. In relation to music company, artist, or photograph, where the services are providing it to music company, producer, or the like, this will always be RCM. No ifs and buts. No options, nothing. Always RCM. Government is saying RCM, compulsory they have to pay it under RCM only. But for others, there is one option given. So for others, if they are temporarily transferring or permitting use or enjoyment of that copyright in relation to some literary works, generally it will get covered under RCM. But here they have given one option to the author. If the author willfully comes forward and says, sir, I will take the registration. And I will only pay the amount of GST. I will pay the amount of GST under forward charge mechanism. I will only give the invoice. In that invoice, I will do the declaration also. In that invoice, I will give the declaration also. Sir, I will, even though my services are getting covered under RCM, I have exercised my option to pay the GST under forward charge mechanism. That's why I'm paying it. Like that, he will give declaration on the tax invoice also. And he should do a promise that he will follow the same for 1 year. He will not withdraw. He will not be given the permission to withdraw within 1 year. That means if he has exercised the option to pay the tax under forward charge mechanism today, tomorrow he can't come and say, no, I want to go back to reverse charge mechanism only. No, he can't say that. He has to stay in that option for 1 year. So if all that conditions are fulfilled, then RCM will not become applicable. Forward charge mechanism will become applicable. But as I have told, very important, this option is given only for author, not for music composer, artist, or photographer. So if you see it here, right. So, however, an author can choose to pay tax under forward charge if he is registered and he filed a declaration exercising option to pay GST under forward charge and comply with all the provisions, and shall not withdraw. Very important. He shall not withdraw the said option within period of 1 year from the date of exercising such option. And also, he makes a declaration on invoice issued by him in the prescribed form. So, whatever invoice he will give, no, in case if he has opted to pay the GST under forward charge mechanism, he'll give tax invoice, right? On that tax invoice, he is also required to make a declaration. What declaration he has to make? That he has exercised the option to pay the GST under forward charge mechanism. The declaration he is required to give. So this is what regarding intellectual property rights. Now, we have bunch of other services which will get covered under RCM. Let us try to cover them as well. So, security services. Even security services are also getting covered under RCM. When I say security services is a very broad term. Many things will come under that security services purview. But they're not talking about all that security services. Only which security services they are specifically talking here is security services provided by way of supply of security personnel. So what they say, which kind of security services? Security services provided by way of security personnel. So by way of supplying the security personnel, like for example, today we have security agencies. If you need security guards for your office, they will supply the security personnel. They will supply the security guards to you. So only those security services will get covered under RCM. Sir, installation of CCTV cameras, that is also a security service, but that will not get covered under RCM. Not all security services will get covered under RCM. They are specifically talking about only those security services which are provided by way of supply of security personnel. If you are providing the security services by way of supplying of security personnel, then only that will get covered under RCM. But not all security services provided by way of supplying security personnel. Even for RCM to become applicable, two more conditions they are saying. Supplier should be other than body corporate. The person, whoever is providing that security services, should be other than body corporate. Recipient must be a registered person. Recipient is a registered person, registered under GST Act. Then only RCM will become applicable. So tell me, when security services will get covered under RCM? Security services are those services which are provided by way of security personnel. Supplier should be other than body corporate. Recipient must be a registered person. Then RCM will become applicable. However, nothing contained in this entry shall apply. So that means RCM will not apply. When, sir? When the recipient is a registered person, but that recipient is a department or establishment of central government, state government, union territory, local authority, government agency who has taken registration only for deducting TDS, but not for making any taxable supply. GTA, one relaxation we have seen, no? Same relaxation they are giving it here. So recipient is registered. Supplier is other than body corporate. Security services by way of supply of security personnel. But recipient is such a registered person who has taken registration only for deducting TDS under section number 51, but not for making any taxable supply. Then RCM will not become applicable. See, when I say RCM not becoming applicable, don't take it as exempted. When I say RCM is not applicable, then other implication is FCM will become applicable. When I say RCM is not applicable, don't go with the notion that it is exempted. No, when RCM is not applicable, go with the notion that FCM will become applicable there. Similarly, if the recipient is registered person only, but he has opted to pay the tax under composition scheme. Recipient is a registered person receiving security services from other than body corporate, practically speaking RCM. But however, if the recipient has opted to pay the tax under composition scheme, recipient is registered, but he is paying the tax under composition scheme. Recipient is registered, but he is paying the tax under composition scheme. Then also, if he is paying the tax under composition scheme, then also what will happen? RCM will not become applicable. Here one more small point has been missed out. Even, just 1 minute. Here also. See, in case of renting of immobile property other than residential dwelling. So one small point has been missed out here in the chat. Just give me 1 minute. Yeah, here. Already I have included in the chat. Even in case of renting of other than residential dwelling also, if the supplier is registered, but the recipient is registered, recipient should be other than composition dealer. Even in case of renting of immobile property other than residential dwelling also, if the supplier is unregistered, recipient is registered, but other than composition dealer, then only RCM will become applicable. So this one small thing in the bracket, I have missed it out. I have already included that in the chat, but I missed out to explain it. So recipient is registered person, but he is not a composition dealer, then only RCM will become applicable. Right. Next, come back. Okay, security services also we have covered. Then finally, we have renting of motor vehicle. Let us try to complete this also. Renting of motor vehicle. Fine. So renting of motor vehicle. If someone is providing services of renting of motor vehicle, that will also get covered under RCM. Renting of motor vehicle also will get covered under RCM. But in order to get covered under RCM, there are some conditions which are required to be fulfilled. Renting of motor vehicles designed to carry passengers, that I will tell you. Renting of motor vehicles, when the service of renting of motor vehicle is getting provided by a supplier to the recipient, then also they will get covered under RCM. But when, sir, motor vehicle should be such a motor vehicle designed to carry passengers. Motor vehicle should be such a motor vehicle which should be designed to carry passengers, not goods. If you are renting motor vehicle designed to carry goods, no RCM, forward charge mechanism. So RCM will become applicable only when you are renting a motor vehicle which is designed to carry passengers. And cost of fuel must be included in the consideration. Cost of fuel must be included in the consideration. Cost of fuel must be included in the consideration. And few more conditions. Supplier should be other than body corporate. Supplier should be other than body corporate. And recipient must be body corporate. Supplier should be other than body corporate and recipient should be body corporate. If all these conditions are satisfied, then renting of motor vehicle services also will get covered under reverse charge mechanism. So listen carefully. So when the renting of motor vehicles will get covered under reverse charge mechanism, in order to get covered under RCM, there are various conditions which are required to be fulfilled. Number one, that motor vehicle which is getting rented out, that should be designed to carry passengers. Then cost of fuel must be included in the consideration. Supplier should be other than body corporate. Recipient must be body corporate. If all these conditions are satisfied, then RCM will become applicable. Recipient will be liable to pay the GST under reverse charge mechanism. But here also there is an option given to the supplier. If the supplier wants to pay the GST under forward charge mechanism, he can exercise the option and pay the GST under forward charge mechanism. But here also for the supplier, an option has been given. If he wants to make the payment of GST under forward charge mechanism, yes, he can pay the GST under forward charge mechanism. Here also, if the recipient is only paying the GST under forward charge mechanism and the reverse charge mechanism, the applicable rate of GST will be 5%. In case if the recipient is paying the GST under reverse charge mechanism, the rate of GST which is required to be paid is 5%. In case if the supplier wants to pay the GST under forward charge mechanism, here also two options are available. One, if you don't want full ITC, with restriction on ITC, you can pay the GST at the rate of 5% on your outward supplies. Another option which is available is 18%. If you want to take full ITC, you have to pay 18% of GST. Previously, the rate used to be 12%, but now it has been changed to 18. The rate is 18. This correction also you are required to make. This is also same that supplementary issue. So if you see here I have given 12%, but it's not 12%. It should be 18%. If he wants to pay the GST under forward charge mechanism, it should not be 12. It should be 18%. So 9% CGST, 9% SGST. Okay. So it should be 9%. So this is the only change which you are required to do in your material. One is at the GTA place and the other one is at the renting of motor vehicles. Okay. Right. So this is what regarding renting of motor vehicle when RCM will become applicable. Next we have one more service. Which will get covered under RCM. So one more service which will get covered under RCM is lending of securities. In case of supply of services of lending of securities under security lending scheme. So who is the supplier? Supplier will be that person whoever is lending the securities. Who will be the recipient? Recipient will be the borrower, whoever is borrowing the securities. So under SEBI, we have one scheme called security lending scheme, where if I am a person holding the shares, I can lend my shares to a borrower in return for some consideration. I will lend the shares and I will get some consideration. So this we call it as security lending scheme. This is also classified as supply of service. Now, who is the supplier? In this case, lender. Whoever is lending the securities, that person will be a supplier. Who is the recipient? Borrower. Whoever is borrowing the securities, he will become the recipient. Now they are saying this service also will get covered under RCM. That means borrower will be liable to pay the GST under reverse charge mechanism. Borrower will be liable to pay the GST under reverse charge mechanism on that services so received. Understood? Next. We have one more thing. Under IGST purposes also, there are some services which are covered under RCM. But this I will not tell you now. Along with exemptions, I will try to cover. Why? Because for that also I have one chart. For that also I have a chart. So that I will try to cover it along with this. So in case of services supplied by a person located in non-taxable territory, that means in case of international transactions, in case of supply of services between countries, what will be the taxability, how you are required to, when exempted, when taxable, when RCM, when FCM. So like this, I have one chart in case of international supply of services, that I will try to cover it in the exemptions. Now I will try to keep it on hold. This is not discussed. This I will keep it on hold. This I will try to cover it along with exemptions. So just let me write it here so that I will not skip it. To be discussed in exemptions. Okay, right. So these are all the various services which have been notified under reverse charge mechanism. These are all the various services which are notified under reverse charge mechanism. Then we have some usual discussion talking about the classification rates and all. So we'll keep that discussion for that discussion is very usual discussion, very normal discussion. You need not worry about it. So just you can refer to that. So one more aspect under charge of GST which I would like to cover now is composition levy. There is one more concept which is covered under the same chapter, under the chapter charge of GST. So we have one more concept called composition levy under section number 10 of the CGST Act. Very small chapter, very small topic. Within a short span of time we could complete it. Let us try to do this composition levy. Let us try to do this composition levy. So rarely they ask a question from here, but if at all they are asking in MCQs, they might test it, not as a standalone question, but they might test a question from in the form of MCQs. So that's why we'll try to quickly cover this composition levy. Will not take much of a time. We can complete in very short amount of time. So let us try to do it. Sir, what exactly is this composition levy? Fine. So composition levy. Sir, what is this composition levy? See, just now in the registration chapter, as I have told, not all business persons are required to get themselves registered under GST Act. Just now, one point which we have clarified is not all business persons are required to get themselves registered under GST Act. Only when their aggregate turnover exceeds the applicable threshold limit, then only they become liable for registration. See, the moment you are a registered person, there are so many compliances which you are required to do. There are so many compliances which are required to do. But what the government has thought is, let us do one thing. You are a person liable for registration and you have taken registration also. But after taking registration also, we will give you one more simplified scheme. Even after taking registration also, we will give you one more simplified scheme. For small persons, not for big persons. For small persons, we will give you one more relaxation in the name called composition scheme. In case if you have opted for composition scheme, you will be given some compliance benefits. You will be relaxed from some compliances. What are they? You are not required to file monthly returns or quarterly returns, only one annual return. You will not be required to maintain some records, some stock records and tax records you will not be required to maintain. And you will be given an option to pay the GST at a very much discounted rate. You need not pay the GST at the usual rates which are applicable on that goods or services, whatever you are supplying. So you can have an option to pay the GST at a discounted rate. At a very much discounted rate, you can make the payment of the GST. So like that, some options have been given. So now, who are that people who can opt for composition scheme? Let us see. So basically, we have two kinds of composition scheme. One is composition scheme under 10 subsection 1 and 2, and the other one is composition scheme under 10 subsection 2A. So the composition scheme under 10 subsection 1 and 2 is applicable for those people who are engaged in supply of goods and also restaurant service providers. So initially we have only one kind of composition scheme, 10 subsection 1 and 2. Who can avail that composition scheme under 10 subsection 1 and 2? Only those people who are engaged in supply of the goods and those people who are engaged in restaurant services. They can only opt for composition scheme under 10 subsection 1 and 2. Thereafter, one more composition scheme they have brought up, which we call it as composition scheme under 10 subsection 2A. This I will come back to that later. First, we will try to complete what is the usual composition scheme we have. I will talk about another composition scheme under 10 subsection 2A at a later point of time. So, but whatever it is, the composition scheme under 10 subsection 1 and 2, it is initially applicable for whom? Only for those people who are engaged in goods. That means either you are a manufacturer or you are a trader. You must be either manufacturing the goods or you must be dealing in goods, trading in goods. Then you will become eligible for composition scheme under 10 subsection 1 and 2. Or if you are a restaurant service provider, you are a what? You are a restaurant service provider. Then also you become eligible for composition levy. So, but when this manufacturer, trader, restaurant service also will become eligible for composition levy when their aggregate turnover in the preceding financial year is up to the prescribed limit. If these people, if their aggregate turnover is less than certain limit in the preceding financial year, then in the current year they become eligible for composition levy. Sir, what is that limit, sir? 1.5 crores. 1.5 crores. If you are a registered person, if your aggregate turnover in the preceding financial year does not exceed 1.5 crores, then in the current year you become eligible for composition levy. Last year's turnover you have to check. If in the preceding financial year, if your aggregate turnover does not exceed 1.5 CR, then in the current year you become eligible for composition levy. And in the current year, you can remain under composition scheme up to your turnover of 1.5 CR. So if your aggregate turnover in the preceding financial year is less than less than or equal to 1.5 crore, then in the current year you become eligible for composition levy. And in the current year, you can be remaining under composition scheme only up to a turnover of 1.5 crore. Up to your turnover remaining within the limit of 1 crore, you can remain under composition scheme. In the current year, if your turnover exceeds 1.5 crore, then you have to automatically come out of the composition scheme and regular scheme will become applicable. So this is what the limit, 1.5 crore. But some states, some special category states told, no, we don't want 1.5 crore. We will make the people registered in our state to be eligible for composition levy only if their aggregate turnover in the preceding financial year is 75 lakhs. And we will permit them to remain under composition scheme in the current year only up to a turnover of 75 lakhs. The government usually gave a limit of 1.5 crore. So some special category states came forward and told, no, we don't want 1.5 crore amount of limit for composition levy. 75 lakh rupees of limit will be enough. That means if a business person, if a registered person, if his aggregate turnover in the preceding financial year does not exceed 75 lakh rupees, then in the current year they become eligible for composition levy up to an amount of 75 lakh. Sir, which are that special category states who told we want 75 lakh rupees of limit? That will be enough? Arunachal Pradesh, Uttarakhand, Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura. So for this I generally give some thing called mantis, something like that. One mnemonic you can develop it using this first letters of this first alphabets of this states. So you can work out some mnemonic. So these special category states told, no, we don't want 1.5 crore limit. We want 75 lakh rupees of limit. That will be enough. So whatever it is, if your aggregate turnover in the preceding financial year is 1.5 crore or 75 lakhs, then in the current year you become eligible for composition levy, and you can remain under composition levy in the current year up to a turnover of 1.5 crore or 75 lakhs. Okay, right. So we have seen who is eligible. Now we will try to understand, in case if you are eligible for composition levy, and in case if you have opted for composition levy, what will be the rate of GST which you are required to pay? What will be rate of GST which you are required to pay in case if you become eligible for composition levy under 10 subsection 1 and 2 and you wanted to pay GST under composition scheme? What will be the rate of GST you are required to pay? If you are a manufacturer, you will be required to pay 1% of your total turnover in a state or union territory. If you are a manufacturer, you will be required to pay 1% of your total turnover in a state or union territory. In each state, in each union territory, you have to determine what is your total turnover. When I say total turnover, on your taxable as well as exempt turnover. In each state, you have to calculate what is your taxable turnover, what is your exempt turnover. Both you have to add it up together. On that total turnover, 1% you will be required to pay. 0.5% CGST, 0.5% SGST. If you are a restaurant service provider, you will be liable to pay 5% of your turnover in a state or union territory. And here also total turnover. So what do you mean by that? In every state or union territory, you have to calculate what is your taxable turnover, what is your exempt turnover. On the total amount, you will be liable to pay 5%. But however, if you are a trader, if you are not manufacturer, if you are not restaurant service provider, if you are a trader, you are also liable to pay 1%. But as a trader, you will be liable to pay only 1% on your taxable turnover. You will be liable to pay 1% only on taxable turnover. On your exempt turnover, you will not be liable to pay that 1%. Very important, minute detail here. So in case if you are a manufacturer, you will be liable to pay 1% of your total turnover in a state or union territory. In every state and union territory, how much turnover you are making. So total turnover, your taxable turnover, exempt turnover, both you have to add it up together. And on your total turnover, on taxable as well as exempted, you will be liable to pay 1%. And this payment you have to make quarterly. And this payment you have to make every quarter, once in every quarter. So let us say, for example, April to June quarter, you have to determine turnover in each state or union territory. What is your total turnover in each state or union territory? On that 1% you are required to pay. Same in the case of restaurant service provider, also 5% of the total turnover. But in case if you are a trader, here also you are required to pay 1%, but not on total turnover. You will be liable to pay 1% only on the taxable turnover. On exempt turnover, you will not be required to pay it. Understood? And this amount, this discounted rate of tax, whatever you are paying, this discounted rate of tax, whatever you are paying, this discounted rate of tax, you have to compulsorily pay it through electronic cash ledger only. This you have to pay it compulsorily through electronic cash ledger. That means you can't take ITC for that. So this whatever 1% you are calculating, 5% you are calculating, and another 1% you are calculating, this liability you have to pay it compulsorily in cash. You can't use ITC for that. So that means whatever GST you are required to pay under composition scheme, you have to compulsorily pay it in cash. You can't use ITC. You can't collect it also. You should not collect that whatever 1%, 5% you are paying, that you can't collect it. You can't collect. You have to pay it from your own pocket. can't collect from recipient. This amount of tax you cannot collect it from recipient also. And one more thing, in case if you are a composition dealer, you can't issue tax invoice. You have to issue something called bill of supply without collecting any tax, without charging any tax. Only value you have to collect, and that whatever 1%, 5% you are required to pay, that you have to pay it from your own pocket. And even the person whoever is purchasing from the composition dealer, he can't avail ITC also. Recipient can't avail ITC. You can't use ITC for discharging your liability. If someone has bought from you, they also can't take ITC, and you can't collect that GST amount from your customer, and you can't issue tax invoice. You have to issue something called bill of supply. Understood? Then see, even though your aggregate turnover is within that limit, within that 1.5 CR or 75 lakh rupees, still some people are ineligible for composition levy. Let us try to understand who are that people not eligible for composition scheme under 10 subsection 1 and 2. Who are that people who are not eligible for composition scheme for goods? That means under 10 subsection 1 and 2. I am only talking about first composition scheme. We have another composition scheme also, that will come back to that later. I am talking about the first category of composition scheme. So who is not eligible for composition scheme under 10 subsection 1 and 2? Number 1, if you are a supplier engaged in making any supply of goods or services not leviable to tax. That means if you are making a non-taxable supply. If you are supplying that alcoholic liquor for human consumption or that 5 petroleum products, if you are making such supplies which are not leviable to tax, if you are making a non-taxable supply, you will not be eligible for making composition levy. You cannot opt for composition levy. Supplier engaged in making any interstate outward supplies. If you are making any interstate outward supplies, then also you can't be eligible for composition levy. Sir, what about if I receive interstate inward supplies? Interstate outward supplies means I can't sell to other states. What if I receive supplies from other states? Will I also become ineligible? No. The restriction is only on making interstate outward supplies. That means you can have interstate inward supplies, still you will become eligible for composition levy. But in case if you are making interstate outward supplies, you are not eligible for composition levy. One more restriction. A person supplying any services through e-commerce operator required to collect TCS under section number 52. In case if you are such a person, you are making supply of services through a e-commerce operator who is required to collect TCS under section number 52, then also you become ineligible. But if you pay close attention here, restriction is on only providing services through e-commerce operator. That means if you are making supply of goods through e-commerce operator, still you become eligible for composition levy. In case if you are making supply of services through e-commerce operator, and that to that e-commerce operator who is required to collect TCS under section number 52, through that e-commerce operator, if you are making supply of services, then you will be not eligible for composition levy. And also, if you are a manufacturer of supplied goods, see here, manufacturer, you should not be engaged in manufacturing of certain goods in case if you want to opt for composition levy. So they are putting restriction only on manufacture. That means can I do trading? Yes, you can do trading. Restriction is only on manufacture. So if you are engaged in manufacturing of the certain specified goods, they have specified certain goods, and if you are engaged in manufacturing of that specified goods, then you become ineligible for composition levy. Manufacturing is only restricted, but trading is permitted. Sir, what are that goods which I should not manufacture, sir? Ice cream and other edibles, pan masala, tobacco products, aerated waters, fly ash bricks, fly ash aggregate, fly ash blocks, bricks of fossil mills or similar siliceous earth, building bricks, earthen or roofing tiles. Sir, is this list sounding familiar? Yes, this list is sounding familiar. Where we have seen just now in the registration chapter, when a person can't enjoy that enhanced threshold limit of 40. Even if you are exclusively engaged in supply of goods, when you can't enjoy that enhanced threshold limit of 40, we have seen you should not be making supplies, trading and manufacturing. Should not be either doing trading or manufacturing of the 7 products. What are they? Same 7, excluding the aerated waters. The same list excluding aerated waters. You should not be either trading or manufacturing if you want to enjoy that enhanced threshold limit of 40. But for composition scheme under 10 subsection 1 and 2, if you want to obtain, if you want to levy, you have to not manufacture. You can do trading, but you should not manufacture. What you should not manufacture? The same 7 products. To that one item will get added to the list, which is aerated water. Aerated water. You should not be doing manufacturing. You can trade. But to enjoy the enhanced threshold limit of 40, you should not be either trading or you should not be manufacturing 7 products, excluding the aerated waters. Clear? Right. So this is one more person who is not eligible for composition levy, and one more person, supplier who is an either CTP or NRTP. If you are a CTP or NRTP, then also you become ineligible for composition levy under 10(1) or 2. And supplier of services, save as otherwise provided in 10 subsection 1. That means you should not be engaged in making any supply of services other than restaurant services. So this composition scheme for 10 subsection 1 and 2, it has been made applicable only for manufacturers, restaurant service providers, traders. So that means apart from restaurant services, if you are providing any other services, then you become ineligible for composition levy under 10 subsection 1 and 2. Okay, so 10 subsection 1 and 2 composition scheme is becoming applicable only for manufacturers, traders, restaurant service providers. If you are providing any other service apart from this, apart from restaurant services, if you are providing any other services, then you become ineligible for composition levy under 10, 1 and 2. But here there is a problem. Some people have started facing problem. Let us say, for example, I'm an electronic stores, I'm an electronic goods dealer. Mainly, I'm dealing in electronic goods only. I sell goods. But some minimal amount of service also I'm providing. Some very minimal amount of service also I'm providing. Let us say, for example, whatever electronic goods I have sold, if any customer gets any service problem, I will fix it for some charge. So I'm primarily engaged in goods, but I'm doing a minimum supply. I'm doing a very marginal supply. But just because I'm making a marginal supply, practically speaking, I become ineligible for composition levy under 10, 1 and 2. Just now as I've told, apart from restaurant services, you should not provide any other service. If I'm providing any other service, like in this case, I'm doing service, repair, small portion of my total turnover, small portion I am doing service. But since I am making a supply of service other than restaurant services, I become ineligible for composition levy under 10 subsection 1 and 2. But it is unnecessary restriction or not? It is an unnecessary trouble or not? I am facing difficulty here or not? So that's why what the act has considered is, we'll do one thing. If you are a person primarily engaged in goods only, but if you are making marginal supply of services, if you are making marginal supply, very minimum amount of supply of service you are doing, other than restaurant services, some other services you are providing, but that is a very marginal amount, then we will still make you eligible to opt for composition levy under 10 subsection 1 and 2. If you are making marginal supply of services, very minimal amount of service you are supplying, still we will make you eligible for composition levy under 10 subsection 1 and 2. But how to determine that marginal supply, sir? What can be considered as marginal? Because if the government leaves it to the choice, everybody will have their own definition. So when we can consider that supply of service is very, very marginal. So that act did not give the freedom for you to decide. The act itself has told it what will be considered as marginal supply. See here. So when it will be considered as marginal supply, 10% of the turnover in a state or union territory in the preceding financial year, or 5 lakh rupees, whichever is higher. How much amount of marginal supply I can do? 10% of the turnover in a state or union territory in the preceding financial year, or 5 lakh rupees, whichever is higher, that much amount of marginal supply I can do. Let us say, for example, my turnover in the preceding financial year, is 100 crore rupees, 100 lakhs, sorry. In the preceding financial year, my turnover is 100 lakh rupees. So now in the current year, I can do marginal supply of services and can still remain under composition scheme. How much supply I can make? 10% of turnover in the preceding financial year. What is 10% of turnover in the preceding financial year? 10% of 100 lakhs. It will come to 10 lakh rupees or 5 lakh rupees, whichever is higher. So in the current year, I can make marginal supply of services up to a limit of 10 lakh rupees. Still, I can remain under composition scheme. Understood? Clear? If my limit exceed, that means in case in the current year, if I have exceeded my marginal supply, let us say, for example, I have exceeded that limit of 10, immediately I have to come out of the composition scheme. I have to come under the regular scheme. Understood? So this is what the brief regarding composition levy under 10 subsection 1 and 2. Under 10 subsection 1 and 2, this is what the composition scheme. But, so just 1 minute, light has went off. Okay, what happened? Come on. Okay. So this is what the composition scheme under. Just 1 minute. So this is what the composition scheme under 10 subsection 1 and 2. But now what happened is, over a period of time, this government has given this simplified scheme only primarily for people who are manufacturers, who are traders and restaurant service providers. Then remaining service sectors, that means mainly service sector, or those people who are doing equal amount of goods and services, they are all kept out of the composition levy. Why? Because just now, as I have told, composition scheme under 10 subsection 1 and 2, it was restricted only for manufacturers, only for traders, restaurant service providers and minimal service providers. But what about others, sir? For them, there was no composition scheme. Mainly for service sector, there was no composition scheme. Or those people who are doing good amount of goods and services, both they are doing, for them also composition scheme is not there. So these people went to the government and requested, sir, we also want some composition scheme. For those purposes, for those people, the people who are ineligible for composition scheme under 10 subsection 1 and 2, if you are a person not eligible for composition scheme under 10 subsection 1 and 2, don't worry. We will give you one more option. That we will call it as composition scheme for services. We'll give you one more option of composition scheme, that is composition scheme under 10 subsection 2A, that we will call it as composition scheme for services. Those people who are ineligible for composition levy under 10, 1 and 2, for you are giving one more option. There is one more composition scheme for you. You can opt for composition scheme for services under section 10 subsection 2A. Sir, who will become eligible? Sir, what is the eligibility criteria? See, for 10, 1 and 2, they told that if your aggregate turnover in the preceding financial year does not cross either 1.5 crores or 75 lakhs, no? But in order to be eligible for composition levy under 10 subsection 2A, your aggregate turnover in the preceding financial year should not exceed 50 lakh rupees. Your aggregate turnover should not exceed 50 lakh rupees in the preceding financial year, and you can remain under composition scheme under 10 subsection 2A up to a turnover of 50 lakh rupees in the current financial year. So what is the limit for opting for composition scheme under 10 subsection 2A? 50 lakh rupees. Your aggregate. Here there is no separate limit for special category states. For 10 subsection 2A, we have a universal time limit all over India, 50 lakh rupees. So if your aggregate turnover in the preceding financial year is not exceeding 50 lakh rupees, then in the current year, you can opt for composition scheme under 10 subsection 2A, and you can remain under composition scheme only up to a turnover of 50 lakh rupees in the current financial year. Understood? Now, sir, in case if a person has opted for composition scheme under 10 subsection 2A, what will be the rate of GST they are required to pay? You told for composition scheme under 10, 1 and 2, the rate of GST is 1%, 5%. But what will be the rate of GST if a person opts for composition scheme under 10 subsection 2A? What will be the rate of GST? So if you come here, if you are a person opting for composition scheme under 10 subsection 2A, the rate of GST will be 6%. 6%, 3% CGST, 3% SGST, effective rate will be 6% of total turnover. Once again, not just on the taxable turnover, 6% of turnover of supplies of goods and services in a state or union territory. So 6% of your total turnover, both the taxable and exempt, you will be liable to pay under composition scheme. And even under 10 subsection 2A also, who are the persons not eligible for composition scheme under 10 subsection 2A is same list here. If you are making non-taxable supply, if you are making interstate outward supplies, if you are making supply of services through e-commerce operator required to collect TCS under section number 52, if you are manufacturer of notified goods, if you are a CTP or NRTP, then you become ineligible for composition levy even under 10 2A also. Then there are some conditions and restrictions which are required to be fulfilled by composition dealers. Whether you are opting for composition scheme under 10 subsection 1 and 2 or you are opting for composition scheme under 10 subsection 2A, there are some conditions and restrictions which are applicable for you. Sir, what are they? So persons opting for composition levy has to comply with the following conditions. Whether you are opting for composition scheme under 10 subsection 1 and 2 or you are opting for composition scheme under 10 subsection 2A. For both composition dealers, there are some conditions which they have to comply with. Sir, what are they? Number 1, they shall pay the tax under 9 subsection 3 or 9 subsection 4, that is RCM. If you are a composition dealer, okay, you will pay at a discounted rate on your outward supplies. But in case if you are liable to pay GST under reverse charge mechanism, you must discharge your liability under reverse charge mechanism at the usual rate, not at the discounted rate. Let us say if you are receiving legal services, legal services are getting covered under RCM. So now you are a composition dealer, but still you are liable to pay GST under RCM. Now that RCM, you have to pay it at the usual rate. Let us say legal services are attracting GST at the rate of 18%. Your RCM liability, you must discharge it at the rate of 18%. Now you can't say, sir, I will pay 1%, 5%, 6%. You can't say it. Understood? So that's what they say here. In case if you are liable to pay GST under reverse charge mechanism, that you must discharge it at the usual rate, not at the discounted rate. And you should not be a CTP or NRTP. Anyhow, CTP, NRTP will not be eligible for composition levy only. And you must mention the words composition taxable person not eligible to collect a tax on supplies on top of your bill of supply. You will issue a bill of supply, on that bill of supply, at the top of the bill of supply, you have to mention that I'm a composition dealer. I'm not required to collect a tax. I'm not authorized to collect the tax, that you have to mention. And you have to mention the words composition taxable person on every notice, signboard displayed at a prominent place of his additional place of business and principal place of business. So at every principal place of business, at every additional place of business, you have to declare that you are a composition dealer. So like that you have to mention. And tax on goods held in stock are liable to RCM should be paid. So under 9 subsection 4 RCM liabilities will be there. That also you have to discharge. And registered person should not engage in manufacturing. So this also I have told, these products you should not manufacture. Then there are some procedural formalities, how you can opt for composition scheme, how you can withdraw from the composition scheme. That procedural formalities are there that you can have a look at it. So on procedural formalities, they mainly ask a question at the inter level. At final level, on composition levy, they might not ask procedural formalities, but this conceptual understanding, whatever we had, that is important at the final level. Okay, so this is what related to composition levy.